again, and we can go to chapter 2. We're going to start chapter 2 right now. And commission rules and regulations, the real estate commission rules. That's who they're talking about there. So at the end of this chapter, we're going to identify the standards set by licensing law and the real estate commission rules regarding brokerage business. We're going to explain the commission regulations for brokerage business relationships and advertising. And we're going to describe violations and penalties for violating licensing law or the commission's rules. All right. So to start off, here's what you highlight in the book, and I just typed the same thing pretty much up here, just with my own explanation. A salesperson cannot accept any form of compensation except from who? Your employing broker. Who can pay you a commission? Only your broker, right? In other words, maintain an escrow account or hold funds belonging to others. So if your clients give you money, what should you do with it? Don't go to Parks Casino. Go to give it to your broker ASAP, right? And then they'll do their record keeping and deposit it in the bank. The escrow bank account, also known as a trust account, where we keep other people's money and only other people's money. And a salesperson may not work for more than one New Jersey broker at a time. Okay, so if you're working in a property management company that doesn't deal in sales and doesn't have access to the MLS, and now you got a friend or family or somebody who's looking to buy or sell a house and you want to help them out, you don't have access to those tools. No, you cannot join one broker to do sales in New Jersey and another one to do property management. You would need to find a broker that does both or make a decision. Am I going to specialize in property management or am I going to do sales? And if you're going to stay just in your property management, what you could do is you could give this as a referral to an agent that deals in sales and still get paid. Okay. So those are your options. You could only work for one New Jersey broker at a time. Okay. Okay. So every broker who's a broker of record in New Jersey and a resident of the state has to have a physical place of business. There are no virtual offices allowed in New Jersey. Broker may have an office in their own home. Okay, hold the phone. You can't just start a business out of your house. Of course, you need to have a house that's in an area that's zoned for mixed use and get the permits for it and all that. But if you're a broker and you have a house that's in an area that's zoned for mixed use, yes, they could turn their house into the brokerage, but they must have a separate entrance visible from the street and must have a sign with the broker's name and the words licensed real estate broker. And the office must never be in the home of any of the broker's associates. Okay, this is to prevent an illegal practice known as license lending. I'll give you an example. When I started my own brokerage, I was interviewing brokers. And I came across several characters that were like, yeah, I know what you want to do. I'm retired. I don't really do it, but I keep my license active. I'll lend you my license so that you could open your business and you do whatever. If you ever have trouble with the real estate commissioner, they show up, you tell them I'm just out of the office. I stepped out and call me and then I'll come there or I'll pick up the phone. I'm like, no, because that's illegal. You're supposed to be, if you're the broker, you're supposed to be managing the business. So that's what I'm hiring you to do. I'm not just cutting you into the profits and such just so I could use your license to run my own business, which apparently some people don't have a problem with doing, even though it's illegal. Okay. So if anything, they should be trying to do stings like that. They'll find a lot of these former brokers like that. And so you will get questions about this on exam. Okay, so who can have an office in their house? Only a broker. None of the associates of the broker. If they do have an office in their house, tell me about it.
It has to meet those requirements.
Which are what?
It has to be visible entrance, a separate visible entrance from the street that you could see it, and it has to have visible
In other words,
signage.
you don't have to walk around to the side or the back of the house to get to the entrance to come in, right?
Right, right. You
Okay.
can see the door and get to the door and see the sign from the street.
Yep. That says licensed real estate broker and has the broker's name on it. Correct. All right. Now, who could manage a branch office? Who could manage any office? What kind of license is needed to manage a real estate office?
A license, I mean a salesperson broker.
A broker salesperson or a broker's license is required to manage an office. Okay.
Was I
So you
right
have
or
to have,
wrong?
well, when you threw in the word broker, you made it right. Okay. When you started with salesperson, I was like, yeah, yeah, you got it right. It's broker, salesperson, or salesperson can manage a branch office or
Okay.
any.
So broker, salesperson, broker goes first with salesperson, not salesperson,
Correct.
broker.
Correct. Because it's a broker type license.
Okay.
Okay. It's just what is the difference between a broker and a broker salesperson? Broker salesperson chooses to work in the name of and under another broker's employee, right? Um, Now, the full time for supervising licensee is the broker needs to be physically, or office manager needs to be physically present in the office during normal business hours, whatever they may be, and not have another job. Why not? Because they're supposed to be in the office supervising. I mean, supervising. Okay. So let's highlight that stuff now. Same stuff that was on the previous slide. Let's do the highlights on it on page 16 here. That's all this is, as well as writing that little note in there. This is full time for an office manager.
For that, where it says is not otherwise employed unless it's under 25 hours, correct?
No, that's for a salesperson trying to get a broker's license. This is for a supervising licensee, aka a broker or broker salesperson that's managing an office.
You're not allowed to have a part-time job even after
Yeah,
for
you
like
already
one
have your
hour.
brokers. You already have a broker's license. If you're acting as an office manager or supervisor, you're supposed to be in the office supervising. So when's your part-time job?
Mm.
So, but in reality, that's the answer you need to know for exams, right? In reality, as long as someone's there in the office, managing the office with a broker's or broker salesperson's license when they're not there, it's okay, right? Because the office is covered. That's all the commission cares about, is that the office is covered by a proper manager, right?
Mm. But is it illegal to have a separate job as a broker? No.
I'm
Okay.
teaching you, I'm a broker, right?
Okay.
So I mean, you get a lot of the instructors. All they got to do is go to the schools then and be like, "Are you a broker? Why are you teaching?" So I mean, it's easy enough for them to figure out. But no, it's allowed. It's allowed. There's a workarounds. There's workarounds to it. As long as somebody's in the office managing in your absence, so that salespeople are not just there scratching their heads and have no guidance from anybody, right? Because what does the broker need to provide? Office space and guidance and direction, right?
Mhm. Thank you.
Uh, what does it mean to prevent license lending? Last line.
Well, like I said, when I was opening up my brokerage, I was interviewing brokers, and they said basically a broker that's going to be absent. They're just lending you the license so you could open a brokerage and run your own business in the absence of the broker even being there. They're just lending you the license just so that you could meet the requirements to
Okay.
get the brokerage license. Okay,
Yep. Thanks.
so that's why that's illegal, because there's no supervision there, basically. So let me know when you got all the highlights, and then I move on to the next slide. Okay.
I'm all set.
Okay.
What do salesperson do 40 hours a week in the office? Prepare contracts for 3 years?
If you if you're in the office that long, you ain't doing squat. You're probably shopping for shoes and pocketbooks online, or looking at porn. You know, in my experience, that's what people are doing if they're sitting around in the office all day long because they ain't working. The only time that you should be sitting around in the office as a licensed salesperson is if you're waiting to meet a client to interview them, right? To search for homes next to each other on the MLS, right? If you are calling to set up appointments, or searching for business prospects and leads, by making phone calls or following up on transactions, typing contracts and preparing documents to be signed, preparing for an open house, or if you're doing floor time, which is basically you're the unpaid secretary of the office that has a real estate license and you answer the phones between certain hours and any calls that come in, those are your leads. Okay. Otherwise, if you just sit or you're preparing mailings, marketing materials, but short of that, if you're just sitting in the office, got me what you're doing as work, right? I mean, other than the items that I just explained, if you're sitting around in the office, you're probably not working or taking a training class in
Yeah,
office.
so yesterday you explained that many brokers are there who says that you was not in the office for 3 years or so. That I was thinking about the same, so that is why this question popped. And
Yeah.
secondly, this guy Ryan Serhant said there is no MLS in New York. Then yesterday we discussed about if we get a license for New York, then how will we know about the properties in New York? I mean,
You
how
got to
does
be
it work?
trained. You got to be trained by you got to be trained
Broker.
by your broker there in New York.
Okay.
It's uh, they actually do have an MLS. It's actually just very expensive to join it. Um, I think for brokers, I forget if it's 16,000 or $32,000 to join. It's expensive. Um, it's up there to join the MLS in New York. And that covers, I think, pretty much all of New York. But the city is the expensive part and Long Island, but it's through the relationships. You curate your own relationships, like sending, doing mailings and marketing materials in New York. Real estate agents can't do that because it would flood the mail rooms of these high-rise buildings, where these mailmen would have to carry, pretty much a case of your mailing material for to fill the building, right? So they have specific rules pertaining to advertising in the city anyway. Not other rural areas, but or suburban communities, but in the city, they have rules against how you could advertise. Uh, I don't know what they are because I'm not a licensed New York agent. I don't care to. I don't even like going to New York, so unless it's upstate on a camping trip, which is upstate New York is like the real world. It's maybe a little rural. I like that. That's nice up there, but the city not for me. Maybe nice to visit if you're there with a bodyguard. It's dangerous these days. But yeah, not my bag, not my cup of tea. So I'd rather just send it as a referral to an agent that lives in New York or that operates those areas and knows it better, and then I split that commission with them with a referral fee. Okay, that's I'm good enough with that, and then I can move on, continuing with servicing my clients in New Jersey. By the way, we didn't really discuss this much. If you're licensed in New Jersey, what does that mean? What kind of deals can you do? What kind of properties can you work with? What are you allowed to do with a real estate license in New Jersey? Well, it covers the entire state. There's no separate residential license or commercial license or industrial license. Okay. Um, you have a real estate license, it's good for conducting all real estate business. Could be property management, could be sales, could be new construction, could be medical properties, it could be whatever, you know. Um, and you could do it anywhere in the state. But if you got a if you got a listing, somebody wants to list a property with you in Cape May, would you take that listing?
Why not?
Because it's almost 170 miles away.
Mm-mm.
There's one reason. uh, are you a member of? There's more than one MLS too. So, are you a member of the MLS down in that area? You know, are you going to be traveling down there if somebody sees a sign on the property and they want to see it? Are you going to take a trip 170 miles down South Jersey to show it, and then 170 miles back home? You ever take that ride?
But it is applicable for license in other states, other cities, sorry, New York and Pennsylvania. That was I was asking yesterday. I
Well,
mean,
they're a lot
is that
closer to us.
feasible?
They're a
Sorry?
lot closer to it. They're a lot closer to us, though, and it depends where you are geographically, right?
Yeah,
I mean,
right.
how far do you want to travel? You know,
Mm,
now that guy Ryan Serhant, I think he's licensed in other states, and you know, he does real estate in other countries. If you ever watch that show, where
yeah,
he traveled down, but
yes.
that's a separate class for you guys to take to learn about international real estate. Okay, that's another specialization. Different countries work different ways. How do you get a loan to buy a house in other countries? Well, maybe you need to have the assets as collateral to get a loan, or you just need to have the money outright. You know, the rest of the world doesn't work like the United States does in that respect as well. Another reason why we're one of the greatest countries in the world. Yes, I believe that. Yeah, that's why people come here. You know, but you know, a lot of things are unique that make living a little bit easier. You know, other places in the world, you want to buy a house, you need the money or collateral to borrow the money. Okay, it's not like here. You know, what's your credit score? How much money do you make? Okay, no collateral to put down, but you do need to put a small amount of money, maybe 3 or 3.5% down payment, right? Because we have these government insured loans, FHA loans and such, you know. We have a lot of different loan programs. So it makes it easier to do real estate deals here, but in other places in the world, maybe not so much. So you would have to learn those specializations. Plus, if you sell real estate, you do a transaction that you earn money on in another country, but that money is getting transferred here because you live here and this is where you're going to get paid. A lot of countries have these taxes. Okay. I know during Trump's first presidency, it was a big deal. People were talking about well, actually, even the second one, too, actually was even a bigger deal because he was talking about uh, what do you call it? What's the taxes, you know, on the other countries? You know, he's I forget the name of it right now.
Tariffs.
Tariffs. There you go. They got tariffs. So now, what is that? What is a tariff? Well, basically, we see uh, it used to be free trade. Everybody called it free trade, right? Free trade sounds like a good thing, right? Free trade. It is a good thing actually, because that means that the country you're doing business in is not going to tax the hell out of your income. Okay, you're free to sell your goods here without being hit over the head with a club of taxes. But uh, it's free trade for other countries to do business here. However, when we try to do business in those other countries, they kill us in taxes. Okay. So all the president was trying to do is say, hey, if you're going to kill us in taxes, we're going to do the same thing to try to force you to do the free trade that we're offering you. And if you're not going to do that, we're going to charge you the same. Sounds like fair trade to me, but political pundits and political parties and sides, politics is a dirty game. So of course everybody makes it sound like it's something mean, evil, and nasty, but it's actually trying to help the Americans that live here, that do business here, that may want to do business in other countries. You ever hear of a Harley Davidson motorcycle getting sold in China?
Oh.
Only to the super rich that are willing to pay it, because they have a 300% tax on the Harley Davidson motorcycle in China. So why would anybody want to buy that when you could just buy a Chinese motorcycle? Right? So it's a disincentive to do business with the United States there, to buy American products there. Okay. So if it was equal trade, that fair trade, okay, if it really was free for everybody, that would be a good thing globally, but unfortunately not everybody plays by the rules, and they rake us over the coals for anything they could get out of us. And it was a good attempt. Now I know this really well because I remember the first time I did a out of country transaction. It was in South America. There was a transaction where I had a client that wanted to buy a vacation property. They knew where they wanted to buy, the area. They had the cash to buy, and it was a done deal. So I was contacting real estate agents in that area, that vicinity where they wanted to buy. And I asked them, I said, listen, I got a client. They're looking to buy a vacation house there. This is the price range. They've got the cash. It's a done deal. As long as you don't screw it up, it is as good as done. So because it's such an easy transaction, I'm asking for a little more referral fee than normal. Instead of 25% referral fee, I'm asking for 35. And then the one guy was like, well, actually down here, it's a 20% referral fee. I was like, you're out of your freaking mind. I was like, who do you think you're dealing with? I was like, no way. So 35%, take it or leave it, and I'll just look up the real estate agent down the street from you and I'll give them the transaction. So what do you want to do? And then I had them sign the contract with me that they were going to pay me the referral fee for the client. And then I gave them the client's info and we went from there once I got the signed contract. Now, when they closed on the deal, which didn't take long to do, I got my commission check that was sent over. But what they didn't tell you is that country had, I believe it was an 18% tax. So right off the top, they took 18% of my commission. So thank goodness I was asking for a higher amount, because I would have gotten practically nothing from them, especially if they were going to pay me 20%. That would have been 2% of referral fee that I would have gotten. Crazy, huh? So you really need to know international law when it comes to different countries and such. And having taking one of those classes on international real estate would be of the utmost importance by the example that I just explained to you. Because, you think you're doing everything according to real estate. Oh, I know how to send out a referral and everything. Yeah, but what about how do other countries operate? How do they get loans if a loan was needed? In this case, it was a clean deal. They had the cash. So all it was a matter of me getting paid. And I got kind of screwed at that because of that 18% tax. Anything leaving their country, any money leaving their country, going to the United States, got hit with 18%. That sucked.
So I have one question. Can a salesperson be a referral agent at the same time?
No,
No?
one license or the other, but you could be a salesperson and send referrals as well. The only difference is a referral agent can only send referrals and cannot work directly with clients or customers.
But we can be the salesperson and can be a referral agent too. I mean, I can refer
Well,
someone in California and get the
yeah,
commission.
yes, you could send a referral. That doesn't make you a referral agent. Okay. Salespeople can send referrals. Okay. I just want you to know the distinction. A referral agent can only send referrals, whereas a salesperson can deal directly with clients and customers, and they could send referrals. And I highly suggest you do. Because if you got a client, for example, that's selling a house here in New Jersey, you get their listing. All right. Don't leave it at that. Ask them where they're moving. Maybe I could refer you to an agent that could guide you and help you out where you're moving. And then you send that as a referral to that other agent. In exchange, you could still make more money off of that client. Right? Don't leave any meat on the bones. Pick it clean. Get all the money you can out of that deal. And what does it take? Getting on the phone with an agent saying, hey, you willing to accept this referral for this fee? Okay, I'll send over the paperwork, sign it, get it back to me. Boom. Just check in every now and then. How's that deal? You still working with them? Make sure everything's going copacetic and you're good to go. Easy money, right? And let's just say that they buy someplace else. So they sold the house with you. You earned a commission on that, right? Now they buy someplace else. So wherever they go to buy, let's just say they're buying a $300,000 house. 300,000. Let's just say the commission is low. It's only 2% that you're going to on the buyer side. So 300,000 times 2%, that's $6,000 commission. Okay. Let's just say that we sent it as a 25% referral fee. So times 25%, that's $1,500. And even if you're just on a low 50-50 split with your broker, divide that in half, you get $750 for picking up a phone and sending over a one-page contract. How long does it take for you to do that? Is your time let's just say it took you an hour. Is $750 an hour more than what you're making now? You're right. I mean, this is just an example of how much money you could make in real estate if you actually treat it like a business and treat it seriously. A lot of people get their real estate license and get into the real estate business, and they work from check to check. I'm going to work hard until I get a deal. I got a client. I'm going to work with that one client, and I don't know what I'm going to be doing for that whole time working with one client. It's not like I got to be there for the full 60 days every day working with them and seeing them. And then I close on the deal. I get all that money. And now it's party time and pay my bills too. And okay, we're rich now. So it's either feast or famine, with most real estate agents out there. That's why a lot of real estate agents don't last, because that's a hard life to live, feast or famine. Okay. So what happens when you get a transaction? You got a deal going, keep marketing, try to get more, put more money back in your business, market to get more clients. You got more transactions going on. You got to realize sometimes those transactions fall through. And if you were relying on that one to pay the bills, pay the mortgage, to pay my car payment, you're going to be screwed. Okay. And you're not going to last. This is why most real estate agents fail out of the business in the first 6 months to a year. Okay. Because they don't treat it like a business. It's either feast or famine. Now, you wouldn't have to fail out if you also have family that's paying the bills and you're splitting everything, and you got that support there that's not relying totally on your pay and your income. I guess people can do that, and a lot of people do. They have this is like a second job for them. But the ones that are in it full time, you can make a lot of money. Just take a look at most of the millionaires out there. At some point in time, they were involved in real estate, right? I mean, just take a look at them. I mean, we got a president. He was involved in real estate, still is. Robert Kiyosaki. There's a lot of people out there, millionaires. Rich Dad, Poor Dad.
Barbara Corcoran.
Barbara Corcoran, right? She had the Corcoran Group. She had a real estate brokerage that she started, and she was working in the business just like us. Okay, and at some point she decided to try to sell the business because she got a bunch of offices together, and somebody gave her a valuation and made an offer on her for her that was a couple $100,000. Okay, and she's like, no. Screw that. I'm going to stay in there. So she built up the business a little bit more, put in her systems in place, made it more effective, made it money making. And then she tried to put it up again. And then she ended up selling it for millions of dollars. And that's how she became the super rich woman she is. Let me see. How much did Barbara Corcoran sell the Corcoran Group for? $66 million. In 2001, she sold it to NRT. Not a bad deal.
I'll ask her to adopt me.
Well, she's still making money in real estate. What she's doing is she's selling endorsements now. You can see that in different counties of New Jersey, you could be endorsed by Barbara Corcoran. Okay, so she'll do a commercial with you. She'll do the pictures with you. Yes, this is my agent. You know, this is the go-to agent. I endorse him. You know, I could only imagine what she charges for that. I mean, I know one guy that's done it. You know, here in New Jersey, but that guy makes a lot of money doing billboards and all kinds of stuff like that. Radio ads. He spends hundreds of thousands a year on advertising. And it ended up panning out for him. You know, he's got this offer, you know, I'll sell your home or I'll buy it, you know, which that's a little bit of a scam in itself, you know, because they get these investors that buy the house. You got to agree to list it at his listing price, which is usually which charges a higher commission. And if you want him to buy the house, the commission goes up to like 10% that he'll charge you. And your valuation, the offer will be like 10% below what his appraiser says it's valued at. You know, so he's building up some meat on the bones and then buying it and flipping it, making money off of that, making money off the commission. And, you know, there's a little bit of a scam to that too, you know.
One more question, sorry.
Yeah.
So as a salesperson, we can sell residential, and we can sell property management, everything, and commercial
Sell,
too.
lease, manage, commercial, residential, industrial, medical, everything. Yep. You're licensed. There are not separate licenses in New Jersey for commercial real estate or residential real estate. Okay. You could sell raw land. Okay. Yeah. Your license is good anywhere in the state for all kinds of real estate business. Period.
Okay,
That's
thanks.
why we got to learn a lot for our exams here too. You know, like if you want to get a license in Florida, I think you could take a self-paced real estate course online, but I think it's 40-hour class or less that you got to take, but in order to get the license. But they have a little whammy there. After you get the license, within the first 2 years, you need to take like another 140 hours of classes or something like that, you know? So I forget what it is, but I know it's a lot more hours of class you would need to take. All right, so let's continue here. Okay, so licenses must be available for public inspection. So, you know, those pocket card licenses I showed you, but there's also the bigger version of the license that a lot of brokers put it in picture frames, hanging them up on the walls, but they don't need to do that. That could be a pain in the neck. Take it from me as a broker. You have to pull out a ladder. You got to find out, okay, which one is, I can't read that writing from here. Now I'm going to be climbing up and down a ladder trying to find your license and pull it out, take the picture frame apart. You know, it's a pain in the neck. I find it easier to print everybody's license and put it in a binder and then just put that at the front desk. And anybody who wants to see it can see it, you know. Now, when it comes to the rules of displaying those licenses, making them available for public inspection, that's allowed. But the main office has to have the copies of the license for everybody working in the main office, as well as any branch offices. The branch offices only have to display the licenses of the agents that are working out of that office. Okay, that's what that rule is. So next step, we're going to talk about those escrow and trust accounts. So on page 16, you may want to write this here. A broker can't keep interest if it's an interest-bearing account. Okay. You know, usually brokers just have non-interest-bearing accounts, but can they have an interest-bearing account? Yes, they can. But they usually don't. unless it's for property management, because property managers usually take tenants long term. They take their deposit money and keep it in an escrow account. It has to be an interest bearing account for property management. Now, when it comes to sales, it could also be an interest bearing account. Usually it's not, because brokers don't want to deal with the hassle of having to give you tax returns showing how much interest you've earned for the small amount of money you gave us that we held for a short period of time. But if you're dealing in an area where you're dealing with multi-million-dollar homes constantly and people are putting down insane loads of cash, then it may make sense to put it in an interest-bearing account there, so that they're earning some money on it. Even though bank accounts don't pay that much in these days in interest-bearing bank accounts, right? How much are you making in your savings account? 0.1% or something? Yeah, there are high yield checking accounts or high yield savings accounts that you can do. I see like Discover's offering it now, Capital One's offering it, although I'm not a big fan of Capital One. There's Discover's offering it, even PayPal. You could get a savings account with them now too. I've got one with a bank in Florida. I've never been to Florida, but I got one with a bank in Florida I signed up with called EverBank, because they were offering 5% interest when everybody else is offering 0.1%. So I put my money in there to make money. Let my money make money. Okay, so everybody got these highlights here. Your trust account, the escrow account, must be clearly labeled as an escrow or trust account, so that in the event of you get sued, you get divorced, or you die, something happens, and somebody makes a claim, that you owe them money, they can't just make a claim of the money that's in that account, because escrow or trust accounts is widely known. It's not your money, it's other people's money. So the money in those escrow accounts, if they're clearly labeled as an escrow account, cannot be touched. Now, brokers are required to deposit funds coming into their keeping promptly, which the commission defines as within 5 business days of acceptance. So your clients give you money. What do you do with it? You immediately give it to your broker, because your broker has to do their bookkeeping in their escrow account. Who gave us the money? How much money? What property was it for? Who was the agent that was working with these people? And then they need to deposit that money into the bank, the escrow account, within 5 days of when you got the money from them. So if they give you cash or a check, don't wait until an offer gets accepted, because the broker has to deposit that within 5 days of the time your client gave it to you. We have to safeguard our client's money. So clients give you money. What do you got to do with it? Immediately give it to your broker. How long does your broker have to put it into the escrow account? Within 5 business days. 5 business days of you accepting it. So if you hold on to it for a day or two, now your broker only has 3 days to do their escrow bookkeeping and run to the bank. So do it right away. Okay. If you hold on to it, waiting for offers to get accepted, now that 5 days is passed, and then you go to your broker, oh, the offer got accepted, here you go. They're going to look at the date on it and throw the check back in your face and say, go get a new one from your client, and explain to them why you need a new check from them, because you didn't give it to me right away. You can't have clients post date checks, okay? Because when we make an offer on a property, and often it says that the buyer gave us a deposit, that's assuming that we deposited the money in our bank accounts and we're sure that that money is actually there, okay? If you never deposited it in the account and yet you're making an offer representing that your client gave you that deposit money, you are lying, okay? We need to be truthful with the other parties on the other side of the transaction as well. Okay. Good way to get in trouble. Lie. It shows untrustworthiness, right? What are all those terms the Real Estate Commission shows in those disciplinary actions page, right? Unworthiness, distrustful, incompetence, all that crap, So turn over that check right away. Be honest. And if they bounce a check, we actually have to let the other side of the transaction know that we don't have the money. The check bounced. And then find out from your clients, do you have the money, or was it just you forgot to transfer it from your savings to your checking? Because sometimes it could be an honest mistake, but we still need to let the other side know, hey, the check bounced, but we're redepositing it because the client did transfer the money. We have to reach out to them, let them know. So we have to be honest. Okay. Because if that money isn't there, then the deal falls apart and they say, hold on to the money, we're going to claim it. We could be in trouble now. So salespeople should immediately give any escrow monies they receive from their broker to their broker. I'm going to give you some advice on accepting cash and personal checks and money orders and all that stuff in this chapter. In this chapter or the next, I forget, but I think it's this chapter, and we'll go over it a bit. Now, brokers are specifically prohibited from commingling their own personal funds in the escrow account with their client's money. Although the Real Estate Commission allows a broker to put a small nominal amount of their money in the escrow account when banks charge fees just simply for having a bank account. Okay. And usually they do these days. So the broker's allowed to put a small nominal amount as long as they keep a record of it in the escrow books that, hey, this is all the money from our clients, and this is the money from me to cover the banking monthly fee. Okay. Now, a broker could put like $100 or something in there, but they can't put like thousands of dollars in there so that they don't have to worry about the banking fees for years to come. Okay. They can't do that. They can put a small nominal amount in there and keep track of it. Okay. Now, here's an interesting.
The banks, I think you might have been. The banks charge
A fee for having the bank account. Yeah.
Is it less than the normal fees, or do they have special packages for escrow accounts?
It's a business. It's a business account. They don't care what you call it. They're going to charge you for it.
Okay.
Yeah. Okay. Now, in some circumstances, the broker may be authorized to collect a commission directly from money that was held in the escrow account. In that case, the business ledger should document the source of the authorization and the amount and the source of the commission. And the money should be taken out promptly after authorization, because leaving that money in the escrow account for more than 5 days after it's become yours results in commingling. So when it comes to the escrow account, how soon does your broker need to put it into the escrow account? 5 business days. And if that money in that escrow account becomes commissions, how soon does the broker need to take it out before it's considered commingling? 5 business days. 5 in, 5 out, right? Yeah, go ahead.
What does ledger mean?
The ledger is just the book that they keep track of the records. It's the record keeping book. They call it a ledger. Okay. So if you give me $10,000 as a deposit because you're buying a house, I have to give that money to the broker. Then the broker writes down, okay, Victor Kaminsky is the real estate agent in this transaction. The client is Gladys. She gave $10,000 for down payment, for deposit, for the purchase or lease of something. They have to write it. Purchase of 123 Main Street. Okay, so now we got an ongoing thing in the ledger book, the escrow book, the record keeping book, that Gladys gave me $10,000. So we got $10,000 in from Gladys, and we got money in from other clients as well. And the broker needs to keep a running total of how much money we got in the escrow account from everybody, and everything's got to add up. And then if your transaction falls through or it closes, then the broker writes out a check, either giving the money back to you or giving the money to the closing agent, writing it out to the closing agent, do the closing and finish your purchase of the property. Okay. So they need to write when money comes in. They need to document when money comes out. And they do that in the escrow book, record keeping book, or ledger, you could call it. Okay. It's all the same thing. Okay.
Thank you.
You're welcome. Okay. Now, when would the funds in an escrow account become the broker's money that he could keep as his commission? It doesn't say that here in the book. Well, usually that would be with a lease. Let me give you an example. Property owner hires us, market their property for rent. We find a renter. The renter gives us the month and a half deposit and the first month's rent. We don't give it to the owner right away. We put it in the escrow account because the owner still needs to get city inspections done, the fire inspection before a new tenant can take over. And then, of course, the tenant has to be given the keys, but we can't give them the keys to the property until the date of their lease begins, right? So we can't give them early to you, can't give you early access. So the money then doesn't go to the landlord yet either until that lease begins. Now, when the lease begins, the tenant, so we had the city inspections and everything, the date of the lease begins, the tenant gets the keys, the landlord gets the money, and then the landlord needs to pay us our commission. Okay. Let's just say our commission was 1 month's rent. Okay. So the landlord's like, hey, listen, instead of you giving me a check for 2.5 months rent, how about you just give me the security deposit a month and a half, and then you keep that first month's rent as your commission because you already got it. It doesn't make sense you writing checks out to me, then I got to write checks back out to you. Okay, makes sense. Okay, but where's that money sitting right now? In the escrow account. So now he just gave me the authorization that that's our commission. Counting of time begins. 1, 2, 3, 4, 5 business days. It must be taken out and put into the broker's business account. Okay. So brokers have 2 checking accounts usually. They have a business account. That's their operating account for paying agents their commissions, paying the bills for the rent, mortgage, keep the lights on, marketing materials, whatever it is. And the other one is an escrow account, which is only for keeping other people's money, safeguarding other people's money. Okay. All right. So brokers have 2 bank accounts. Oh, there we go. I jumped the gun, explaining exactly what I just went over. Now, so a broker cannot keep any interest earned if it is an interest-bearing account. A broker cannot make a secret profit on their client's money by collecting and keeping that interest. Accounts must be clearly marked and labeled as escrow or trust account so that nobody can make a claim against it if they get sued, divorced, what have you. The licensees must give any deposit monies that to their broker immediately so that they could then make those notations in their escrow record keeping books. And then brokers must deposit that money within 5 business days of acceptance. Now, not of the time that the offer's accepted, or not from the time that they accepted the check from you, but the time that you got it from your clients. That's when start counting that time. Brokers must keep all records accounting for all funds, deposits, and withdrawals in an escrow book, which must be updated at least every quarter. Brokers must keep bank deposit slips and escrow records for 6 years. There we go again. Commingling is prohibited. What is commingling? When the broker mixes their money in the escrow account with their client's money. Written receipts are required for cash deposits. Funds already in escrow that become the broker's commission must be removed within 5 business days, or otherwise it could be considered commingling. So I basically took all the highlights from the previous pages and I just put it all on one slide here for you. If you wanted to have it as a note right there for yourself, there you go. Otherwise,
So for how many days the client's money is deposited in escrow account? Is there any interest on it for the clients, or is it long
if it's
term like a bank
it,
account?
if it's an interest-bearing account, you would also need to fill out have your clients fill out the tax form. What is it? What's it?
Okay.
W-9 or 1099 or no W-9. They do have to fill out the W-9 disclosing their social security info and everything, because we're going to be opening an account in their name or a sub account in their name, and then the bank will give them tax forms at the end of the year for for pennies that their money earned in interest for that short time it was holding. So juice ain't worth the squeeze on the headache of keeping all that paperwork. So most brokers don't have interest-bearing accounts. But
But
yeah, they would have.
isn't it compulsory? I mean, if they're it's a bank, right? At the end of the day, it's a bank. So isn't it compulsory to show to the income tax department that
No,
whatever they are?
if it's not earning interest, no, because the
Okay.
broker is the one that has the escrow account, and that escrow account is on file with the real estate commission, and so they're all the clients that they have, they're depositing all that money in one escrow account and just keeping track of whose money is whose using that ledger or escrow book, right? To keep track of it.
So
If
if you're
if
saying that I have 10 properties, 10 buildings or 10 condos, whatever, and I have a property management company and all that money goes into escrow account and I'm not paying tax on it?
No,
No?
property management, property, well, no, if you're not earning income on it, you don't pay taxes on it. If we're just holding on to your money and it's not earning interest, you only pay taxes on income, right? So the interest would be the income that's taxable. So if it's in a non-interest bearing account, you're not earning any interest. There's no taxes to be filed for it, right? We're just holding on to it for you. So this is one way a broker can do it, and most brokers do it this way, a non-interest bearing account, because it's easier. Um, but it's more secure if they have an escrow account that has sub accounts, and those are usually interest bearing. So a broker can open up an escrow bank account that for every client they get, they open up sub accounts. So there is a account number, a new bank account under the main bank account number for each and every client. So this way, you can't if their check bounced and the broker didn't catch it, and they write a check back to that client for their deposit to give them their deposit money back. Well, if the check never cleared, well, that check is not going to clear back to you because your check bounced. Okay, but if the broker has just one bank account and everybody's money's put into it and they didn't catch the check bounced and then they give you your money back, they're giving someone else's money because your money never cleared in the account. You know what I'm saying? But we're getting too deep into it. That's beyond the scope of what you need to know for exams. Okay. So here's some additional information about escrow accounts and my advice to you. So you must provide accounting for advanced fees from clients if they give you $25 or more. It has to be put into the escrow account. For example, if they pay an advanced fee to help with marketing costs. Now, most buyers or sellers will not give you money to help market the property. That's what they're paying you a commission for if you close on it. However, builders, developers, they often have a marketing budget, and they may be giving us some money to put up billboards and create big signs to drape down the sides of buildings and such like that, and do certain kinds of marketing or advertising in newspapers or commercials or wherever. And if that's the case, we need to notify them how much money they gave us and how it's being utilized within 90 days. Okay. But that money needs to be put to the escrow account in the meantime. Okay. Now, so that's a rarity, but if they do give us money, we need to put it in the escrow account and basically give them accounting of how we're using it. Okay. Now, cash deposits or withdrawals. Any cash deposit of $10,000 or more has to be reported to the IRS. Do you guys know how to report it to the IRS? I don't either. It's required to be on a special form. I know that because anytime you communicate with the IRS, it has to be on a certain form that's numbered, right? You got a form number for everything. I don't know what it is because I'd rather not communicate with the IRS, right? So any cash deposit of $10,000 or more must be reported to the IRS. So you know what I just told you? I don't accept cash. Because if I accepted cash, 10,000 or more, or close to 10,000, you got to report it to the IRS. It's easier just to have them have a bank account and cut us a check. But I don't even like personal checks because sometimes they bounce. So withdrawals must never be made to cash, because if you drop a check that's made out to cash and not to a specific person, anybody can cash it. It's good as cash. So here's my tip. Reasons not to accept cash, even though it's perfectly legal and we're allowed to. If you get robbed, you're responsible for that money. Counterfeit cash. If any of those bills they gave you were counterfeit, you go to deposit it. That's when you find out. Well, you may get a visit from the Secret Service, who is going to do an investigation when the banks report that counterfeit money was deposited by you. Now you go back to your clients and you tell them, hey, listen, some of that cash you gave us was counterfeit, so we're going to need you to give us some more money that's not to cover that deposit. You know what the response is going to be from your clients, right? Whoa, I don't know where you were between the time I gave you the money and you went to the bank, but I gave you, well, I want my money back. Right? That's going to be their response. I know that was my response. I one time got paid by somebody and I deposited the money and there was $100 bill that was counterfeit, and the bank kept it. They wouldn't replace it with a good one. And I was mad. But what are you going to do? You got to go after that person who gave it to you. So going back to your clients, they're not going to admit that they knew it, if they knew it at all, but they're going to be like, wait a minute, I gave you the money. I want my money back. They're going to feel like you robbed them, just tell them, hey, it's counterfeit cash, so avoid the drama. You guys know what drama is good for? What's drama good for?
I would say your mama, but my mom is so.
TV, right? Drama's good for TV. That's about it.
Okay, good.
Now, I don't know about you. Some people like drama in their life and they're like drama queens and they always got drama going on around them. Me personally, I don't like drama. I don't want it in my personal life. I certainly as hell don't want it in my work life, right? What about you? You want some drama in your work life, or would you like to avoid the drama? Yeah, save the drama for your mama, right? Okay, so I don't accept cash. Don't want to get knocked over the head and robbed, to be responsible. Don't want to have that counterfeit money, then have to go back and ask for more. And then they're going to be, oh, I want my money back. I gave you the money. I want my money back. Drama, drama, drama. I don't want to have to report it to the IRS. So how about you deposit the money in a bank account and then you get a bank manager's check to give to me, or a certified check. Okay, so I don't have to worry about it bouncing either. So it's highly suggested to get a certified check or bank manager's check only. Now, in reality, can you accept cash? Yes. Keep in mind, this is my advice to you not to. And I'm giving you plenty of reasons why.
Is one exception, can they meet at the bank so the cash could go through the counter?
No. Remember, your broker's got to do some escrow record bookkeeping first. I had one of my agents do once before, because I explained this to them before. They're like, oh, the client wanted to give cash. So, it was for a rental. So it wasn't that much. It was only a couple of $100 deposit, whatever. And then I'm looking at what they did. They thought they were being smart. They said, well, to try to, to avoid the counterfeit cash, they put the money on a copy machine and they took a photocopy of the money. And I said, so what, we're into counterfeiting money now? They're like, it's a copy. Like, what do you think counterfeit money is? It's a copy. You're not supposed to be photocopying money either. I could get in trouble if the real estate commission comes in here and they see a file full of photocopied money. It's obvious it's not real because it's black and white, on a piece of paper, but it's still counterfeit. We can't have this, because you're trying to think, well, if I make a copy of all the bills that they get, and then it shows up that this one with this serial number was counterfeit, now we can say, hey, they gave it to it. I'm like, no. That's drama. Why do you even want to go through that? you know, have them deposit it in their own bank, but they don't have a bank account. That this is actually common, especially with foreigners. A lot of foreigners, people born in other countries, they come here. A lot of them have pillow money because they don't trust the institutions, they don't trust the banks and such. So they don't want to deposit the money, so they keep it in their mattress or their pillows or safe at home or wherever they keep it. And so they don't have bank accounts. But you know what? Not my problem. Don't make it my problem. Okay. You want to buy a house? You're going to need to have a money trail of where your money is coming from, right? Even at the closing, you got to come with those deposit monies. If you don't have a bank account, we need to see where it's coming from. That when people purchase houses and they got pillow money, we know that this transaction is going to take longer because we're going to tell them that you need to put it in a bank account. You need to open a bank account, and those funds need to be what we call seasoned. Okay. Seasoned funds, we need to be able to show that it's been sitting in the bank account for at least so long of a period before that money was transferred somewhere, to show that it's not coming from some illicit purposes like prostitution, human trafficking, drug smuggling, terrorism, terrorist activities, et cetera, et cetera, et cetera, and that's why the money needs to be seasoned and traceable. Okay.
But if it
So
is allowed to accept cash deposit and the client insists, then in that case, what should we do?
well, why
I
do we
mean,
need to report? Why do we need to report it to the
IRS.
IRS?
Hmm.
So that they could try to figure out where it came from.
Hmm.
Okay.
Okay.
This is a requirement. This all is stemmed from these acts were the laws that required is stemmed back from old laws pertaining to terrorism and nefarious actions of money launderers and human traffickers and the drug smugglers and cartels and such. We need to be able to track where that money came from, and that's why. So I'd rather let the bank do the reporting to the IRS instead of me, right? So go put that money in a bank account. The IRS will report you. They don't tell you this, but when you deposit 10,000 or more or close to 10,000, they actually report it to the IRS. They don't tell you about it, but they're doing it. Okay. If you guys ever watch Cops, the show Cops on TV, or Live PD Cops, any of those programs? You ever watch any of them on TV? If they're down in the southern states by the border states, up to a couple 100 miles inland, if they pull somebody over, they ask them if they have any large amounts of cash, drugs, bombs, grenades, anything like that on you. No. They they're asking for a reason, and if they search your car and they see that you have a large amount of cash, they can seize it. They could hold on to that money until you could prove where it came from. First of all, you were hiding it. You said you didn't have a large amount of cash. Now they found a large amount of cash, so they get to keep it until you could prove where it came from. And then it's very difficult, if not close to impossible, for you to get that money back. Okay. And you get people that say, well, I just sold a business. I was carrying around a lot of cash. I didn't think it was any of your business that I had this money on me. So that's why, well, we're going to hold on to it. There's actually laws there that now the ATF and the Treasury, oh, no, not the ATF, it's the Treasury, they reported to. And the Treasury has, the Treasury Department of the United States government has relationships with the police that because they're the ones that found it and seized it, that they could keep a portion of it too and use it for their police things that they need for policing, their equipment or whatever. And then the Treasury keeps the rest of it. So there's an incentive there to find that money and seize it and such. So, if you're driving around with a large amount of cash like that and you can't show where it came from, cops can take it from you. Turn it over to the Treasury. Good luck getting it back. Just interesting little factoids, not on exam. So let's move along. Make sure return deposits are made out to the person who gave the deposit funds in the first place. Sometimes we have people with relatives and family members that are helping with money to buy the house, right? Or the deposit money or what have you. Um, uh, let's try to avoid the drama. If now this is for your broker should be doing this. Um, if the deal falls apart, you don't return the money back to the person who gave you the check. Return the money back to the person whose name was on the check. If it was a relative that gave the money, it should be written back out to that person. Okay. I've had an instance with this once before, and it was drama. Relative helped, gave some money to help with the deposit to purchase a property. The deal fell through. I wrote the check back out to the buyer instead of the name of the person that was on the check, which was a relative, because I didn't catch it right away. Um, and then the relative calls me screaming and yelling, "Oh yeah, this person's got a gambling problem and but gambling's drugs, whatever problem that they have, that's drama, right? How the hell was I supposed to know? They're buying a house, the deal fell through, I gave the money back, but so lesson learned after that, I only write the check back out to the person it was who made out the check to initially give it to us so I could avoid that drama. And then I'll give it to that buyer. He can't cash it anyway, right? So just a little advice. Avoid personal checks and money orders. Personal checks sometimes bounce. Money orders, they could be stolen and washed and resold, and you don't know that it is a bad money order until months later when the money order company gets that. They do their financial checking of all of their money orders in their systems, and then they see that a washed check, a stolen one, was already was used. They go back to the bank account where it was deposited and they take it out. And by then, that's another one of your clients' money that's in there. So I avoid money orders too. When buying all cash, we should get proof of funds letter from the bank. Okay. So I don't need to know how much money that the buyer has. I just need to know that they have enough. So the way that we do this is we get a proof of funds letter. I know we get the players all the time. They're like, "All right, dog, you don't need to know how much money I got. I got enough." Well, you know what? I don't know you. So I need a bank manager's standard form letter. It's called a proof of funds letter, where the bank manager will peek into your bank account. And if you're buying a house for 400,000, I need to see that as of today, you have $400,000 to complete that purchase. Okay. So the bank manager will take a peek in your bank account. You could have $10 million in the bank account. I just need a proof of funds letter that says, as of today, you have $400,000 in that bank account. The bank manager signs it, stamps it, and that's a proof of funds letter. Okay. And we send that along with any offers that are made when people are buying cash. They don't come to us with a duffel bag full of money. All right. It's usually money wires and transfers through the banking system. And in order to prove it to the seller that the buyer's got the money, we get that proof of funds letter. Okay. That's how it works.
Is this term important for exam? Proof fund letter?
I don't know. They may have it in a question, but either way, you should know this for actual
Oh,
business.
okay.
Okay. Because you do get people that come out and say they're cash buyers. Okay. Well, uh, you're not going to be like, well, I need you to come with a duffel bag full of money and show me that you got it. Or I could get you I need a proof of funds letter from your bank. Okay. All right. Now let's do the highlights for those things that we've seen on those previous slides. Here we go. Advance fees of $25 or more must be placed in escrow. Broker has to give accounting of how their money is being utilized within 90 days. Cash deposits of $10,000 or more must be reported to the IRS. Get that? Let me know when you got it. Hey, George, you here with us today?
Yes.
There you go.
What page is this on, the advance fees?
Page 17. You see up here?
Oh, okay. Okay. Thank you.
You're welcome.
All set.
All set, yeah.
All right. Continue highlighting here. This is on page 17, and then from this point, this is on page 18. Okay, so write the word all above records and cross out of trust account activity, and then write this below that. So it should read, every broker must keep all records for at least 6 years. And then you write, you crossed out of trust account activity because we're covering all records, not just bank account records. We're keeping all records for brokers, right? Must be kept for 6 years. And then you're going to write this little note here. Except expired listings and unaccepted offers must be kept for 6 months. Now, it doesn't matter what kind of question you get on exam, and you will get questions on exams pertaining to items and how long does the broker need to keep records for. Everything is 6 years except for these 2 items. Makes it easy to study too. Everything's 6 years except for unaccepted offers and expired listings. They need to be kept for 6 months. And that's all written here under other documents on page 18, somewhere in this paragraph. There you go. In a much wordier way. I like to keep it simple, straight to the point, easier to study. And by the way, when you guys work for a broker, any clients that you get to buy or sell real estate, are they your clients?
Not really.
They're the broker's clients.
They're the broker's client. You are hired by the broker to assist them in their business. Okay, you are licensed under that broker. You cannot do business on your own. So therefore, the clients are not yours. Real estate agents get into a habit of saying, my clients, my client, my client. They're not your client. Technically, they're the brokers. So if you quit or get fired and you leave that brokerage firm, you're supposed to turn over the list of all the clients you've been working with to your broker. As well as any of those transactions, you can't take any of those records or contracts with you. They belong to the brokerage office. And if you take them with you and the broker reports you to the real estate commission, you can get in trouble for that because they're not your clients. Those are not your transactions. They were just transactions you were working on assisting the broker. Okay. Stop thinking of yourself as an individual when it comes to understanding how this relationship works between you and the brokerage firm. Okay. Think of yourself as the broker's big toe. Okay. The broker needs that big toe to get around, right? They need you to help them in the business. But if that big toe gets cut off for whatever reason, can the broker still get around? Sure. They're going to be limping a little bit, but they can still get around. So if you leave that brokerage, can they still work and get by without you? Sure. It's just harder to, right? So the broker does need you, but they can work without you. Okay. You cannot work without the broker. That toe is just going to be lying there in the street. Okay. If it's not attached to the broker. So you need the broker in order to survive, big toe. Okay. You get that analogy there? Being the big toe. Okay. Everybody got these highlights and these notes?
All set.
Okay. So once again, here's just another slide, just giving the breakdown for all the different things the broker needs, or a bunch of things the broker needs to keep for 6 years. Escrow records and bank statements, contracts and accepted offers, listing agreements, bills for rent, utilities, advertising, purchase receipts, commissions paid to agents, and expired listings that had offers that were once accepted on them, but the deal fell through. Those ones they need to keep for 6 years. Now, if you get a question on exams, I don't think they're going to get that deep into the explanation that, oh, the listing was expired, but it was under contract and the deal fell through. If they did get that detailed, well, you need to know then that one needs to be kept for 6 years. But otherwise, just expired listings, keep them for 6 months. Okay. Now, why is it that we got to keep things for 6 years? Well, you ever hear of a term called statute of limitations? It's a time in which one has to assert their legal rights. So if you wanted to sue someone, right? If police wanted to press charges against someone, statutes of limitations are time limits in which those rights can be exercised, or those laws will allow somebody to be prosecuted still. So 6 years is usually the statute of limitations for lawsuits, most lawsuits. Okay. So that's why the broker needs to keep the records for 6 years. Now, except for the following, which need to be kept for 6 months: the unaccepted offers to purchase or lease. You made an offer, it was just rejected outright, never accepted. Or expired listings that never had offers accepted on them, 6 months. And all records, contracts, listing agreements belong to the broker, the brokerage, the company, and the salesperson must not remove any of these files from the office when they leave that brokerage. Okay. All right, here's some examples of agents that mishandled the money. Let's see what happened to this guy here. He failed to supervise. This guy's a broker salesperson. He admitted to violating the New Jersey Administrative Code here by failing to supervise a salesperson under her employee. Employee. Specifically, that the salesperson failed to place into the escrow the buyer's deposit for a property, and they got a $2,000 fine. So the broker got a $2,000 fine. So this tells me this was for a branch office, because this is a broker salesperson. So that tells me that she was the branch manager. Should have made sure that that agent turned over that deposit money, but didn't. So she got fined $2,000 for something the agent failed to do, because she's supposed to be supervising him. So this is the agent that actually she failed to supervise. He admitted violating the same administrative code by failure to deposit the buyer's deposit check within 5 business days. He got a $2,500 fine. So those dates, clients give you money, what do you do to it? Immediately give it to the broker. Let them do the escrow record keeping. Okay. And then here's another one. What did this person do? Admitted to violating New Jersey statutes by failing to immediately turn over escrow monies received to her broker for deposit in the trust account, and agrees to complete an additional 3 hours of CE and agency that won't count towards the mandatory hours, and got a $1,500 fine. Okay. So this person got a lower fine, but they have to complete CE classes. And they were charged with not violating the administrative code, but actually the statutes, the laws that cover the same stuff, depositing within 5 business days. All right, so sales contracts. You guys as real estate agents are only allowed to prepare sales contracts for residential property, even though we can work in commercial and in industrial real estate. We are only allowed to prepare contracts of sale or lease for residential property. All other types of properties, the contracts for sale or lease must be prepared by attorneys. Okay. So what is considered residential? So let's highlight this here. Licensees can prepare sales contracts only for 1 to 4 family homes in single building lots, because more than one lot, one buildable lot, is considered a tract of land. It's considered commercial. Attorneys need to draw up the contracts for those. So how do we prepare a contract for sale or lease of commercial property? Well, the sale or rental of commercial or industrial property or businesses is initiated by a letter of intent, sometimes referred to as a term sheet. That's why I wrote term sheet here in the margin, because you're just spelling out all the terms that you want the attorney to include in the actual contract that they're going to make custom write it up. Okay. We could have a standard sales contract for 1 to 4 families and single residential lots. Okay. It's easy to have a universal contract for those transactions. But to have a universal contract for all types of commercial transactions, for all the different types of properties and, the stipulations in them, that needs to be custom done, and that needs to be done by an attorney. Okay. So you need to know that for exams. We could only prepare sales and lease contracts for residential 1 to 4 families and single buildable lots. Anything else? We could start the process by doing a letter of intent or term sheet, and then the attorney will draw up the contract. Now, listings must be entered into the MLS within 48 hours. You should write that up there because it's not written there. And then also highlight all written offers must be forwarded to sellers within 24 hours. I like to keep these things two together. Both of these things, you do see them written together where you could highlight it in the book in a much, 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 much later chapter. But I like you to know this as we move forward. In every chapter, I bring it up to you, so that you got it stuck in here. How soon do listings need to be put into the MLS from the time that you get them?
48 hours.
And any written offer must be forwarded or presented to the other party within
24 hours.
There you go. Does it matter if there's already an offer that was accepted? Does it say there's an exception to that here? No. So even if there's an offer accepted on the property, if another offer comes in, you still need to forward it and notify your client about it. Unless they told you in writing they don't want to entertain or see any other offers. So any other offers are to be held as backup offers. Unless they put that in writing, you need to forward to them every offer that comes in still. Okay. So you're allowed to tell them, hey, you could write a letter that says that you don't want to entertain any other offers and that I'm to hold any other offers as backup only. I'm going to need it in writing. Otherwise, if other offers do come in, I'm going to have to keep bringing them to you. And sometimes, the sellers want to see them until they see that it could get annoying. I've had situations where you had people, they love to negotiate, and this one guy, you got to realize cultural differences too. Some different cultures love negotiations. Okay. And they'll negotiate the hell out of everything. And, I've had before guys that were, trying to negotiate. They're like, well, how much is the other offer? Can't tell you. I can't disclose what other offers from other people are. That would not be fair to them. Okay, well, is it more than full price? I can't disclose that to you. Make your highest and best offer, put it in writing. So the guy starts making lowball offers, and the client's like, this is ridiculous, and then he starts making, as those offers are getting rejected, he starts making more offers in increments of $1,000. And the client is like, what the hell is wrong with this guy? He makes a lowball offer. Now I said, because he's trying to figure out how much the other offer is that you accepted, and what you accept above that. So they said, well, we already accepted an offer. Okay. I've had other situations where they said, okay, you know what? Counter him full price. Counter him above asking price and see what he does. So that's the possibilities of what could happen too. So anyway, we need to forward all written offers that come in. Now, we're also going to become members of the Realtors Organization. Now, this is licensing law and the Rex rules that require all written offers be forwarded within 24 hours. However, as a member of the Realtors Association, even if it's a verbal offer, we're supposed to forward those offers according to the Realtors Association's rules, right? But Do they have anything to do with our licenses? No. It can only affect our membership in their organization. Okay, so at the time of listing, sellers of residential property must be furnished with a copy of the Attorney General's memorandum regarding the New Jersey laws against discrimination. We're going to go over that in chapter 4. It says
A
here,
question. I have a question.
Yeah.
I forgot. Yeah. So if I am the salesperson and I'm not the member of the of NAR, so do I still have to follow those rules, or I'm the broker's employee, so I have to follow?
well,
And broker is NAR.
which rule are you talking about? The
Uh,
verbal contracts
yes,
versus the
yes,
written ones, right?
yes.
No, you don't, because that's a rule of the Realtor Association.
So if the broker is an R member and I'm working under him, so do I have
You
to follow
must,
the rule?
yes, because uh, the way the brokers memberships in the Association of Realtors, if a broker is a member of the Association of Realtors, the rules are all of their agents must be a member as well. So it's not up to the broker to allow you to join or not to join. They could cancel your broker's membership if you don't join. Now, sometimes because it could be several $100s to join the Realtors Association. Because remember, they're signing you up for 3 different associations, right? So it could cost you a couple $100s to join them initially. And when they brokers sometimes will try to work with you and be like, okay, well, you could work with us, and we'll sign you up for the association, and uh, you know, as soon as we can, but we'll try to string it along for a little while without letting them know that you're at the office until they catch us, so that you can then join them and pay the bill then, because it's a lot of money to come up with all this, and when you're starting out, you know, um, I tell agents usually right out the gate when they take this class. I got it on our website too. I usually tell people right out the gate to get a good start in real estate without having to, try to float expenses. You need to have about $1,500 to $2,000 to get a good start in real estate. That includes the real estate class, errors and omissions insurance, membership in the realtors organizations, and maybe a little money for advertising and business cards and stuff to start. You don't necessarily need a website at the beginning. You could get that later, where you could generate your own leads and not rely on the broker to spoon feed you leads that they're also sharing with other agents. Okay. So that they can make sure that somebody's going to turn them into a client and a transaction that closes. Okay. So anyway, the Attorney General's memorandum, what is that? It's a document we need to give to property owners, only to property owners, at the time we get a listing. It's about the New Jersey laws against discrimination. So how come we don't need to give it to buyers or renters?
Because it would be the person who owns it who could discriminate against who's going to be living in their house, I guess.
Well, can't buyers and renters discriminate too?
Yes.
Sure they can. And that's up to them to do. But if you're offering your property for sale or rent, you cannot discriminate against who you're going to sell it or rent it to. But buyers and renters, they can discriminate till their heart's content about where they want to move to or where they want to buy or rent, right? The only thing is, if they're blatant about it and open about it, we cannot assist them in those discriminatory searches, though. Right? But they're free to discriminate till their heart's content. What is discrimination? Let's just look at the word discrimination first for a second. Is discrimination a bad word? No. Discrimination means being selective, being choosy, Okay. We just automatically associate it with like racial discrimination and things of that nature, right? Which are negative. But I don't know how old some of you guys are, but I remember some commercials used to be on TV for like this real snooty type of mustard that was out there called Grey Poupon. Okay, it's like a French mustard, you know. And they used to have commercials on TV where these two guys with Rolls Royces pull up to each other at a light, and one's making a sandwich in the back of his Rolls Royce, and he runs out of the Grey Poupon mustard, and he rolls down the window to the other one. Pardon me, would you have any Grey Poupon? And the guy hands it out the window to him. And they say, Grey Poupon for those with discriminating taste for the finer things in life. Okay. So the word discrimination is not necessarily a negative thing. It's just we're so used to being programmed with it being racial discrimination or something negative. Okay. So don't automatically go there. Okay. But when it comes to real estate, often, we have buyers with discriminating taste. They're looking for certain features in homes and such. But if they're searching for homes based on like racial discrimination or those illegal types of discrimination, well, for that, we cannot assist them in searching for that. It's hard enough for me to find you this much house in this price range. You know what I'm saying? Uh, so to find that big house in this with all those features you want in this price range is hard enough job. Now for you want me to start investigating who lives in an area? Can't do that. Okay. That would be but buyers and renters are free to discriminate all they want, even if it's a negative kind of discrimination, as long as they don't share that with us and we don't assist them in those types of discriminatory searches. Okay. But sellers or owners of property, let me phrase it that way instead of sellers. I'm going to say owners because they could also be not selling; they could be renting. Um, if they offer their property for sale or rent, they cannot discriminate. So about who they're going to sell or lease it to. So we have to give them the Attorney General's memorandum, which talks about the LAD, which is the New Jersey Law Against Discrimination. We don't give them the law; we give them the document that talks about the law. And the Attorney General, anybody know what that is? The Attorney General is the highest law enforcement officer in the land. So in the state, every state has a state Attorney General. All right. And then our country has an Attorney General, which is the highest law enforcement officer in the country. Okay. So that's what the position of Attorney General is. Memorandum is just a fancy word for a notice. Okay. So this is a notice coming from the Attorney General, the highest law enforcement officer in the land, talking about the New Jersey laws against discrimination, as well as the federal laws of discrimination that when it's just informing the property owner that they cannot discriminate if they're offering their property for sale or lease, whether they use us or not. All right. So this guy, he got in trouble for what did he do? Oh, listings need to be uploaded in the MLS within 48 hours, but so do the changes. So if you got a property that goes under contract, you got to change it to under contract status in the MLS. If the deal falls through, then you got to change it back within 48 hours to available again. Okay. Otherwise, you're not treating everybody fairly, right? You're not treating other agents equally or potential buyers equally, where they could have the same equal opportunity to view this house and maybe make an offer on it. So this guy, what did he do? He failed to update in the MLS the property when it came back on the market, therefore failing to deal fairly with all parties of a real estate transaction. And so he had to pay $1,500. Funny thing is, I know this guy. I've dealt with him several times, and every time he did this. So it seems to be a repeat pattern. It was bound to be that he would get caught at some point in time. Okay. Now, is he still doing it? I don't know. Maybe. Did he learn his lesson? I don't know. But I just know I dealt with him on several occasions. He was in, let's see. I think it was North Brunswick. Was it North Brunswick or East Brunswick? I forget. There's a complex there that he lives in, a townhouse complex, and he's like the real estate agent that gets all the listings there, you know. And So he also tries to get all the buyers for his own listings. So he doesn't like to update it in the MLS, the status, or sometimes he'll just tell you, you can't make an appointment. An offer has already been accepted, but yet the MLS shows it as available. You know, that was my experience with him. I'm not going to say that he's still doing that or anything. I'm just saying my experience in the past. But since then, it looks like he got busted in 2018. All right. So let's see. Failure to provide a duplicate original and initialing changes on contracts. Okay. So what is a duplicate original? When we prepare a contract for purchase or lease, often we don't just make it one. We make multiple copies that the parties sign every one. So they're all original contracts with the person's wet signature from the pen on the contract. So they're all original contracts, right? We call that a duplicate original. It's not a photocopy. It has an original signature on it, because photocopies of contracts are not enforceable in a court of law if it should get to that point for whatever reason. So we need to provide a duplicate original to all parties involved in a transaction. Anytime somebody signs a contract, we need to immediately give them a duplicate original of any disclosure. I give them duplicate originals of disclosures, of contracts, of everything. All right. So real estate licensees are required to promptly provide a duplicate of the original document to every person who signs a listing contract, sales contract, or lease. All parties should initial any additions or changes to the document, and copies of those changes must be provided to all parties as well. Like if we make an offer and the seller rejects it, so we cross it out, and then we write the offer price that they're willing to accept, 310 above it. Well, the buyer, when they made this contract, they signed it for 300,000. They didn't sign it for 310. But now we get the seller to sign it for 310. And then we're going to make the initials, have each party initial and date next to every change. And now that contract is good again without you having to rewrite the entire contract over again. That's a way to make it, to adjust it on the spot. Okay. And then you just go back to the other client and get them to sign an initial next to each and every place where there was a change. If you make changes to a contract and you touch it with a pen and you don't get everybody, all the parties involved to initial next to every change, you just voided the contract. It's not legally enforceable. But if they initial next to each and every change, we're good again. Okay. That's the law. That's the way it works. Now, what about in today's modern day where we have electronic signatures? How do we get a duplicate original of that? You just print another copy, because there was no original wet signature on it to begin with. So you just print out another copy of it, and that's your duplicate original. It has a long code that's on the bottom. All right. And here's a guy who got in trouble because apparently he failed to provide a duplicate original of the contract, and he failed to have alterations of the contract initialed by all parties. So he had to pay a $1,000 fine. How does the Real Estate Commission find out about this stuff? I have no idea, but they do, and people get fined and get in trouble. So sorry, I don't have answers for you about how they found out, but if you go to the Real Estate Commission's website, the disciplinary actions page, and you find these things, in blue here, this consent order, you could click on it and it opens up their hearing document, because they don't just issue fines and penalties and sanctions against people's licenses. They actually have a little trial over it where you get to defend yourself from these claims. And then the consent order shows what happened. It's like court documents, even though you're not going to official court in front of a judge, you're doing this in front of the Real Estate Commission has a panel of judges, that listen to your arguments and decide whether they're going to fine you or not. Okay. If a real estate broker is also licensed as an insurance broker, this is page 18, mention of the buyer's purchase of insurance from that broker, if included in the sales contract, must be confirmed separately in writing not less than 5 days before the actual closing of title. So what are they asking here? They're saying you are a licensed real estate agent, but you also have a license to sell insurance. Okay. This is common in those one-stop shop real estate brokerages where they sell real estate services. You could get your mortgage loan, homeowners insurance, and everything all under one roof from that one brokerage firm. Okay. Often those are the brokerage firms that have custom real estate contracts that often have a checkbox if you're going to be getting the mortgage loan through them. They have a checkbox if you're going to be getting homeowners insurance from them or title insurance. And because the box is checked, sometimes the box is just pre-checked. Okay. And then you sign the contract. Oh, now you got to get insurance through them, right? No. This is why the Real Estate Commission says they need to be confirmed separately in writing on a separate document that you know that you do not need to get insurance from them. However, you are choosing to get insurance from them still. Okay. They need to get that on a separate piece of paper, separate from the actual sales contract within 5 days, at least 5 days before the closing. So it gives the buyer the opportunity to get insurance through someone else. That's basically the idea behind that. So you guys get a better understanding. Okay. Now, this is illegal in New Jersey. Listing agreements have to be a blank line with the commission spelled out either as a dollar amount or a percentage of the sales price. You cannot have what we call a prescribed fee schedule. Basically, it's limited options for you to select from, like you see here. Pick one by circling 6%, 7%, 8%, 9%, 10% commission. Okay. That's not negotiable. That's what we call a prescribed fee schedule. They're limited options that they're giving you to select from. That's not negotiations. That's not negotiable. Okay. In some states, that's legal. New Jersey, it's not. In New Jersey, it needs to be a blank line where you handwrite in there what the commission is going to be. If it wasn't written in there, if it was pre-typed in there even, when did they actually negotiate on this? Right? So it wasn't negotiable. And according to the law in New Jersey, all commissions are negotiable. Okay.
Well,
So
it is negotiable depending upon which one you choose.
well, no, you're given limited options. This is all you could choose from. So let's just say, do you think 6% is a high amount of commission? A lot of people will say, yeah. Okay, well, we're only starting at 6% here and going up. Which do you want to choose?
No,
6%? Okay. And now you're happy with 6%? Okay.
No, that's what I was gonna ask. Is there a cap on the commission?
No. There's no minimum. There's no cap. Whatever you could agree on with your client on charging them and whatever they're willing to pay you.
Okay.
How about in other states? Is it fixed?
No. That big NAR lawsuit was against, there's actually federal laws against this. It's called price fixing. There's something called the Sherman Antitrust Act. It makes price fixing and allocation of markets and bid rigging of auctions illegal. Okay. So, price fixing is, which actually you see at the bottom of this very slide here too. You see the very bottom of this slide? This is from something from chapter 3. Let me first explain what it is. If two agents from competing firms, they don't work for the same company, you should not be talking with each other about the fees you charge the public for the services you perform. It could be construed as you working with each other, trying to set an industry standard on the prices that you charge. So basically, nobody's going to be able to get those services cheaper elsewhere because all you people in the industry are talking with each other and you all agree not to charge less than a certain dollar amount. So therefore, the public will not be able to list their property with a real estate agent for less than that amount. Okay. So it is anti-competition. So this law is in place to prevent anti-competition and to spur competition in the marketplace. Because if you and I offer the same product or the same services, um, how do we try to get the business away from each other? Isn't that what you're trying to do? Don't you want the business? I want the business. So how are we going to, who gets the business? What are you going to do to prove that, to get the business? Show that you're better at what you do? Sure, you could try to do that. But if we got the same exact product, same exact service, how do you get the business from the public? Charge less, right? So competition drives down the prices for the public. Bad for us, good for the public, right? So we charge less and the public benefits. So let me see here.
So it's applicable for the whole country, not only for New Jersey, right?
And it's applicable to all industries, not just real estate.
Okay.
Okay. This is how they broke down in the 1920s or 30s, was it? I forget. How they had Rockefeller break down his oil companies, right? He had an oil company called Standard Oil. It was the biggest oil company in the world. Okay. The government went after him to try to break up his monopoly that he had, because he owned so many divisions. He owned Standard Oil, which owned a bunch of oil companies, Standard Oil under Standard Oil, that he basically dominated and controlled the market pricing for oil, right? Oil, fuel, gas, whatever. And so he could set the price to whatever he wanted. So what they did is they went after him and they said, "You're too big." So they broke him down. They used the Sherman Antitrust Act because it's anti-competition. Anytime there's a competitor, he buys them out or puts them out of business. Anti-competition, so that he has the say. So they used this Sherman Antitrust Act to break his Standard Oil. It was such a big company, they broke it down to 32 different companies. That's how big it was. They broke it down to 32 different oil companies. And contrary to what he thought was going to happen, he ended up making more money by doing that. Because now he has some companies that were charging more and less, and people would then comparison pricing go to them, but either way, he still captured the business, and he ended up making more money than he did before, although he fought it. All right, now, if we make, as a real estate agent, you could have a client that's a buyer, and they're interested in a property that's not listed for sale with a real estate agent, but it's a for sale by owner. We call them FSBOs, FSBO, right? FSBO is short for sale by owner. So they never listed a property with a real estate agent. And because they never listed their property for sale with a real estate agent, they weren't given proper disclosures of commissions and fees and such. So if we put an offer on a for sale by owner property for our buyer clients, we have to add this phrase into it. Now, you don't need to study this phrase and memorize it. You just need to be aware that there's a certain disclosure that needs to be added to contracts, okay? And the purpose of it is to show that you do not engage in an illegal practice of price fixing. So this is what that paragraph says. As seller, you have the right to individually reach an agreement on any fee, commission, or other valuable consideration with any broker. No fee, commission, or other consideration has been fixed by any governmental authority or by any trade association or multiple listing service. So nobody is setting the prices. There's no standard commission. Okay. People ask that all the time. What's the standard commission rate? My answer gets robotic. There is no standard. it's all negotiable between the buyer and the client, or the client and the agent, you know. Otherwise, it can be construed as price fixing. And we didn't even get into what the penalties are for violating the federal law for price fixing. It's up to, for an individual, like an agent, a single agent like you, the fine is up to $1 million and up to 10 years in prison.
Oh my God. Okay.
Now, if it's for a company or a trade association or a school that's trying to teach you how to fix pricing, the fines can be higher, upwards of $100 million or more, and up to 10 years in prison, and up to 3 times the amount can be awarded to the person who suffered damages because of your price fixing.
I hope
So,
nobody has violated this law.
oh, people violate it all the time.
What are you saying? 10 years in prison?
Well, yeah, I don't know who's getting 10 years in prison though. Look, I like to give an example. At the end of the time where Trump was first president, at the end of his presidency, the Department of Justice actually did an investigation, and they found out there was a conspiracy, a violation of the Sherman Antitrust Act among chicken producers for broiled chicken products that were sold to Costco and the places like KFC and all those other fast food chicken outlets and stuff, and those pricing clubs. They artificially all agreed, all the chicken manufacturers, the chicken producers, the growers, they all artificially held the prices higher. So you can't go to a competitor to get it chicken at a lower price. Chicken, I don't know if you remember around then, chicken prices were high. And it was like, why are chicken prices so high? And it was because all the chicken manufacturers, they conspired with each other to fix the pricing at a certain amount and would not go below it. So the Department of Justice found out about it, and they started going after these chicken producers. And one of them, they squeezed it to them, and one of them admitted guilt and agreed to pay a $104 million fine. It was a Pilgrim's Pride, I think. They agreed to pay, they admitted the collusion amongst all those chicken producers, and they agreed to pay a $104 million fine. Now, all the others,
Altogether or only him?
no, just that one company.
Okay.
So all the other companies, they were like, screw you, you need to prove it, because they knew this was towards the end of Trump's presidency, and the Department of Justice works close with that administration. And they saw the Biden administration was coming in, and their whole idea after January 4th was get Trump and all of his protesters, or the people that went to January 4th to the Capitol, So they pulled everybody, all these investigators, from investigating other stuff like this or going through with the prosecutions on this, and they put them on get Trump and get his supporters. So for years afterwards, they dropped it altogether. And these chicken manufacturers, they saw the politics of it. So they were like, screw you. You want us? You got to prove it. And they were going to be pulling away from that and focusing on other things. So they knew that they would get away with it. Plus, there's a statute of limitations on these things, right? What is it? 6 years? Right? So they figured, hey, you know what? We're going to buy our time. It's already been so long since we got charged on it. So now we got so long before they could follow up with it, and they never did. So all the other ones got away with it. Okay. So, yep.
Yeah.
All the
So
other
sorry.
manufacturers you see on the shelves, other than Pilgrim's Pride, who is the only one that admitted guilt and paid a fine, everyone else got away with it.
So for these FSBOs, who prepares the contract? What documents or
You, if you're working
you
with the
who?
buyer,
Salesperson.
yeah,
Okay.
yep, you're representing the buyer. You prepare the contract. The buyer's agent prepares the purchase contracts. Unless it's new construction, they like to use their own that their attorneys prepare.
But if the deal is between the two individuals, buyer and the seller, then there is no role of salesperson, right?
You are helping them in that purchase, in the purchase there. Real estate agent is needed for more than um, showing people properties. Okay. I know people like to cut them out because they don't want to pay commissions, right? But do you know the process of going through and purchasing a house and all the details and all the disclosures and all the inspections and all the required things?
But in
You know,
that case, salesperson will not get any commission, right? In FSBO,
sure they would. Sure they
they
would.
will.
You would write in the sales contract that that because there's no listing, the seller agrees to pay us a commission of bup, bup, bup.
Okay.
Okay. But now the laws have changed a bit. The seller can still say
But then,
no,
but
but
then
then the
what's the
buyer
point?
would need to pay. Then the buyer would need to pay the commission.
But then what's the point of hiring an agency if they want to, sell it by themselves? I mean, if
Well,
if
no,
I'm selling a house to my neighbor, I mean, we are friends. If I want to sell my house and we did a contract, verbal contract,
yeah.
then we have to go to agency, to the sales, to the broker for the paperwork or
Or you could just,
attorneys.
or you could just do it through an attorney.
Okay,
You
got
because
it.
the attorneys know the process too. Although the attorneys are not going to be running out to do the with you to do the home inspections or arranging home
Mm-hmm.
inspections. They're going to tell you just do it on your own.
Okay.
You know,
Okay.
get a home inspector. You know, but they're not going to be sitting there holding your hand, telling you what to do every step of the way. That's what we as real estate agents do. Okay. We guide people through the process to make the transaction as smooth as possible. We tell them all the paperwork that's needed. We coordinate between the lenders, the attorneys, the sellers, the buyers. You know, we make sure that the inspection, then we negotiate on the work that needs to be done. We make sure that the seller gets it done. After it's done, we have to arrange for the home inspector to go back in there again, inspect it. For the seller side, we need to make sure that they get the city inspections to get the CO and fire certificates. There's a lot of stuff. We give
Yeah.
guidance on ordering the you got to get an appraisal done. Your lender will get the appraisal done, but we need to send that appraiser out, give them access to the house so that they can get the appraisal done. We need to get home inspections done. We need to address any issues. We need to make sure that any work was done and done properly. We give a guidance to them towards the end of the transaction to get the homeowner's insurance, make sure that utilities are going to be transferred so that you don't have to pay hookup fees if they get turned off. Then you're going to have to pay hookup fees to get them turned on, and there'll be an interruption in you not having gas and electricity when you first move into your new house here. We try to make sure everything gets transferred over in a smooth manner so it's seamless and it doesn't have additional cost to you. We try to move everything along to make sure the transaction closes in a timely manner, because that interest rate that you were quoted by the lender could go up because interest rates are always fluctuating. So we try to get them to lock in the rates, and they only do it for a certain amount of time. So we try to get that transaction through, pushing everything along so that we close in a timely manner so that you get that interest rate and it doesn't go up on you. Now, there's a way to prevent it from going up on you, but you'd have to pay the lender hundreds of dollars or thousands of dollars to lock in the rate. It's called getting a rate lock, an extension to the rate lock. We advise buyers to get you're going to need to get a survey of the property done. And when you get the survey, attorneys tell you just get the survey. We tell you make sure that you pay the surveyor extra money to put the stakes in the ground at the corners of the property. If your property only has four corners, you're gonna have them put these stakes in the ground. A stake in the ground could be a piece of wood or a piece of iron rebar that they stick in the ground at each of the corners of the property. Now, if you were to wrap a string around them, you could have a visualization where your property line is. So what those surveyors do is they measure the property. You pay an extra fee. They'll put those stakes in the ground, and they usually bang them in the ground to it's below the surface, so that you don't hit it with a lawnmower or anything. And you could just always find them with a metal detector and pull them up if you ever need the visualization. If you want to put in a new fence, you know where your property line is. You want to put up a shed or build a structure, you're going to need to know where your property line is, because just walking out, looking at a survey and then walking up to a property, impossible for you to tell where the property line is without those surveyor stakes as a guide. Now they can vary greatly from one surveyor to a next, how much they charge. So I would suggest not just hiring the surveyor that your attorney recommends, but shop around. Ask the surveyor, what do they charge for the survey? But also, what do they charge for putting the stakes in the ground? I've seen surveyors charge as little as $50 per stake to bang it into the ground at each of the corners of the property. Hopefully you only have 4 corners and don't have a property that got a lot of angles, then you're going to pay a lot more. To as much as $475 per stake that they put in the ground.
Okay.
It's
Interesting.
big difference, right? So the real estate agent gives you the guidance and tells you, first of all, you're going to need it. We don't need it. Well, if you ever want to put a shed up, you ever want to put a fence up, you're going to need it, because the city has requirements of how far off the property line it needs to be. And if you don't know where your property line is, you're going to need to pay a surveyor to come back out, survey it again, and put the stakes in the ground again. So you might as well get it done now. Have them countersink those stakes into the ground. You know where your property line is. Okay. All right. So let me see here. What do we got here? By adding this disclosure, we're saying that we do not engage in an illegal practice called price fixing, a violation of the Sherman Antitrust Act, which we're going to go over on page 55 and 56, which is in chapter 3. I know that while we're doing chapter 2, we'll probably skip there a little bit in our notes, but we don't need to worry about that just yet. Wait, do we? No, not just yet. Okay, so I'll leave this up here for you guys to highlight. Actually, we already highlighted this, didn't we? On page 18, you guys already got this, right, under their documents for how long they need to keep them for. Okay. All right. And here's another slide that's you should probably snap a picture of. It has a boatload of topics that you definitely have exam questions on, whether it's school or state. A lot of exam questions coming out of this slide. So I'll leave this up on screen because we're going to break for lunch. If you come back early, or if you leave early for lunch, you could take a look at this, snap a picture of it. Either way, when we come back, we're going to go over it. So let me pause this recording.
I'm also running. Sorry, it's okay.
No, hold on. We have regulations of documents. So we learned about the duplicate or original. Anytime you sign any kind of a contract or disclosure with someone, you should immediately give them a duplicate original of it. It's a copy with original signatures. In other words, it's an original. Then commissions are negotiable between the client and the broker, and they must be expressed as a fixed dollar amount or a percentage of the sales price. No predefined fee schedules are allowed. All commissions have to be negotiable. Agents must include a price fixing disclosure in FSBO contracts. That was that paragraph that we read. I told you didn't need to memorize what it says, but just be aware that that paragraph has to be added in, just for when you do business, that you don't engage in illegal price fixing. Licensees can prepare contracts only for residential properties, which are 1 to 4 family homes in single buildable lots. Anything more is considered commercial real estate, and those contracts need to be prepared by attorneys.
Excuse me, when you say 1 buildable lot, the lot can only be buildable to
like one
what?
house. One
Just
house.
one house. It can be
not
multi-family.
Yeah, just not a tract of land where you're putting up apartment buildings or anything more than 4 family, or more than 1 house.
Okay, thank you.
So the agents, of course, when they start that process of dealing with commercial properties or tracts of land, uh, they could start the process by preparing a term sheet that of all the terms that they want added to the contract. Parties sign that, but that's not a legally binding contract. It's just that showing that they agree to those terms that they want added to the contract, and then an attorney will write the contract. Whichever attorney they agree on to write the contract will write the contract and then put all those terms in it. So that's what they mean by writing a non-binding intent to purchase or lease, also known as a term sheet. It's not legally binding. That's what it means. The contract would be. Now, written offers must be forwarded or presented to the owner within 24 hours. And all listings, we need any listing we get. What is a listing? Let's address that. It's when a property owner hires us to market their property to find a ready, willing, and able buyer or renter. Okay. So when we get those listings, we need to put them in the MLS. That's the multiple listing system or service. These days we refer to it as a system because it's a computer system we enter the properties into with all their details, and then we share that. That's how we share our listing inventory with other licensees. And according to the administrative code, all real estate agents are required to, when we get a listing, it's available for you or your broker to show, or agents from your office to show. It must be available for everybody to show. Okay. Unless the owner told you without encouragement from you not to cooperate with any other agency. Okay. And then you need to confirm that because you're required to cooperate with other agencies. So if they told you not to, you're allowed not to, but you need to get it in writing now to cover your butts because you're required to share your listing inventory with other brokers. And if the owner tells you not to, well, you're allowed not to cooperate with other brokers just by selling, advertising and marketing that property and showing the property just through your agency's own efforts. But you need to get that cover your booty form signed. It's called a waiver of broker cooperation. So you don't have to cooperate with other brokers, and where the owner directs you not to cooperate with other brokers. And that's what that is right here. So who could direct you not to cooperate with other brokers? Your broker? No. The real estate commission? No.
Oh,
Sellers,
seller.
buyers? No. Only the sellers, yeah. Only the owner of the property can direct you not to cooperate. And then you have them sign that cover your booty form, which we call a waiver of broker cooperation. Okay. You should get in the habit of doing everything in writing. Cover your butts always. Right. Putting things in writing, making notes for transactions. If you have a transaction folder where you put all your contracts and everything in for that one client, on the inside cover, write notes. If you need more notes, staple a piece of paper to it so you can write even more notes to keep track of transactions, when appointments were made for showings, when you were out of attorney review. And now you also have something, a guide that you can just look at. Offer was submitted here. It went to attorneys here. It was out of attorney review and we were under contract as of this date. I adjusted the changes in the MLS on this date. If it's a bank-owned property or you're doing short sales or whatever, you got to communicate with lenders. Often you're going to do a lot of communications and you're going to need those. It's a good idea to have your record of who you spoke to on what date and what you spoke about, what transpired. It's a good idea to have. So then you could bring it up later on if need be. I found it works very well. And if you get in a habit of doing things like this, it could even serve as evidence in court, right? Okay, owners, buyers, and tenants can choose whether or not they want to hire a lawyer. Do you need a lawyer for a real estate transaction? No. Contrary to popular belief. But you better not tell people that you don't need a lawyer, okay? Because we have something now that's called the Opinion 26 Notice. It's a document that must be made as the cover page, sitting right on top of the contract. Before any buyers or renters or sellers see the contract, this document has to be sitting on top of it when they're not using an attorney that informs them of their rights to hire an attorney. Okay. It's basically a big fear mongering document created by attorneys that basically says, hey, if agents aren't using attorneys, clients aren't using attorneys, they have to inform them that they have their rights. Otherwise, they're depriving them of their rights. You know, like you have the right to remain silent if you give up that right. Okay. So you have the right to an attorney. Okay, with real estate transactions. They don't want agents telling people you don't need an attorney. They want agents to tell them you have the right to hire an attorney. Okay, and why is that? Well, a lot of states in the United States, they don't use attorneys in real estate transactions unless there's a problem. But in New Jersey, we're one of those states that have attorney review. And a lot of agents from other states don't understand this. So when they send us referral business and we tell them, oh, the property's in attorney review, they freak out. They're like, oh my God, what happened? And you're like, huh? What do you mean what happened? Because it's a normal way that we do business here. It's like when people sign the contract, it goes to the attorney for attorney review where they can make modifications or changes to the contract, and then we go on from there. Then it becomes a legally binding contract. Most other states, the real estate agents take a more active role in the transaction, and they do for residential real estate what we do for commercial real estate. They prepare those term sheets and go back and forth with the terms until everything's worded exactly the way they want it. And they write the contract one time so it doesn't need to be modified according to all those agreed upon terms. And then after that, they don't have attorney review and it's a legally binding contract. See, in New Jersey, we don't do that. We actually write the contract and then we send it off to attorneys to start attorney review. Or if we don't send it off to attorneys, you count 3 business days. 1, 2, 3. Now you're in a legally binding contract if you didn't do attorney review. Okay. So that's the way it works in New Jersey. But a lot of other states, the agents, they don't have that. So when they hear that there's an attorney involved, they think there's a problem with the transaction because they only use attorneys and bring them into the fold when there's an issue, you know. So in New Jersey, we used to have in the an issue down in the southern part of New Jersey. They do things like they do in Pennsylvania, where they don't have the attorney review as the normal process, and they did that term sheets and then they write the contracts. And now one real estate agent had the bright idea saying, hey, since we take a more active role in the transaction, we could actually save buyers and sellers the cost incurred by hiring a lawyer, right? Because we do what the lawyers would have done. Unless there's a problem, then we would hire a lawyer. So this agent had the idea, I'm going to do marketing like that. I'm going to put on my marketing pieces. I'm a more active agent. I take an active role in the transaction, and I could save you the cost incurred by hiring a lawyer. And that postcard or letter ended up getting into a mailbox of an attorney. And the attorney saw that and he was like, oh, hells no, we can't let this happen. Next thing you know, all these agents are going to be telling people they don't need attorneys and taking money out of our pockets. But he's not wrong. You don't need an attorney. Rats, what can we do to stop this? Light bulb. How about politicians write the laws? How about, or they think up the laws, but who actually writes the laws? Attorneys for those politicians. So this attorney had the idea, I'm going to write up a law and I'm going to write up a disclosure. And real estate agents were going to be required to use this disclosure anytime somebody's not using an attorney, that it has to be sitting as the cover page, telling them that they have the right to hire a lawyer. And if you don't hire a lawyer, it runs certain risks. You know, it's like a big fear-mongering document to people. Now he just needs to pitch it to a politician. So he went and pitched it off to some politician, and politicians, they're political whores. You know, they'll do anything for attention, right? And so the politician got pitched and by this attorney. The attorney said, "Hey, listen, these agents, have you heard what they're doing out there? They're telling people they don't need an attorney and they're putting them at risk in real estate transactions. This could be a big danger for home buyers out there." So I came up with the idea that we could write this disclosure that agents, if people are not using an attorney, they have to inform them they have a right to hire one. And this document needs to be on the cover page so that we could prevent them from depriving them of their rights and putting them at risk. And the politician was like, "Oh, okay." Pitched the idea, got it passed in New Jersey, and now it's law. So there we go. More documents, more disclosures that we need to do. The Opinion 26 notice is only for New Jersey. So you will not see this document in any other state. It's now, if you look at the document itself, it just says notice at the top of the page now. It doesn't say Opinion 26 anymore, but that's what it's called, the Opinion 26 notice. I'm not sure when they removed the words Opinion 26 from it, but that's still what it's called, the Opinion 26 notice. What is it? What does it do?
A lawyer,
It tells people that they have the right to hire a lawyer. Correct.
What page is this on?
That's on page 201. That's in chapter 11 stuff.
Okay.
You know, but we're going to talk about it in this chapter. We're going to probably talk about it in the next chapter. But page 201 in chapter 11, that's where we really get into it, because that's contracts. All right. So if a real estate broker is also licensed as an insurance broker, remember they also need to give that 5-day notice separately in writing that they don't need to get the insurance from us, but they could get it from someone else, or they could choose to buy it from us. But they need to have it on that separate document, separate from the contract, informing them that they're not obligated to get the insurance from us, but yet they could choose to still. Okay, so look at that. All that stuff, you recall some of it. Some of it we didn't go over yet, but I just explained it. And so there's a lot of stuff on this slide that you will get questions on exam. So if you haven't yet, you may want to get a screenshot of it. Okay, I'm going to change the slide now. All right, so we already spoke about the Opinion 26 notice, and licensees can prepare contracts only for residential properties, which are what? 1 to 4 families and single buildable lots. Now, there's another disclosure that we give to people. This is the first one that we give to anyone we intend to do business with. It's not required for commercial real estate, only for residential real estate. It is the CIS form, not CSI. That's a TV show. This is CIS. It stands for the Consumer Information Statement. Okay, so what are we informing the consumer about with the CIS form? What is that all about? Well, let's read this. Yeah, we can read it. Any licensee involved in the sale of residential real estate with 1 to 4 family dwelling units, or the sale of a vacant 1-family lots or residential lease transactions of more than 125 days, because less than 125 days is considered a seasonal rental, is required to supply information on brokerage business relationships to buyers and sellers or landlords and tenants. In accordance to 11.5-6.9, what is 11.5?
Administrative code, rules and regulations.
Administrative code, correct. And it says that right after here. Okay, let's see. In addition to disclosing the nature of licensees' relationships to all parties involved in the transaction, both verbally and in brokerage agreements, offers, contracts, and leases, the licensee must provide a copy of the CIS, the Consumer Information Statement. It's basically a definition sheet that tells you the different relationships, the different ways your brokerage can work with them. And then, like they said, on every brokerage agreement, offer, contract, or lease, there's a disclosure on them as well. It's basically just a checkbox. I plan, as of this time, to work with the buyer as a buyer's agent only, seller's agent only, disclosed dual agent, transaction broker, or the new type of agency called designated agent. Okay, which we're going to go over all those in later chapter 3, unless it's brought up here in chapter 4, and then I'll bring it up briefly. Okay. CIS form, who do you need to get? Is it required for commercial transactions? No. Is it required for leases? Residential leases? Yes, it is. But only if they're more than 125 days. Anything less than that, short-term rental, it's not required. But are you safe giving it to anybody? Sure. All you're doing is you're telling them, as of now, I plan on working with you as a buyer's agent only. That means I only represent you. My company only represents you. Seller's agent only, your company only represents the seller. Disclosed dual agent, your company represents both people, whether it's you as an agent working with both the seller and the buyer, or if it's you working with the buyer and another agent in your office working with the seller, you're still a dual agency because your company is representing both parties in the transaction. Or that new designated agent where the broker is a dual agent, but they could assign you to work with the buyer, another agent in the office to work with the seller only. And then you could be designated agents to work just like buyer's agent only and a seller's agent only. You're designated that way by your broker, and it's your broker's job to make sure that you guys keep the information separate and don't disclose any information that your clients told you in confidence to each other. Okay. Or you could be a transaction broker, which doesn't have the word agency there. Transaction brokers, they don't have fiduciary duties to anybody. If you're working as in the capacity as an agent, buyer's agent, seller's agent, disclosed dual agent, or designated agent, you have certain legal obligations to the people you're working with. We call them your clients, and we call those legal obligations your fiduciary duties. Those are your legal obligations that you owe to those that you represent. But nothing in the law says you need to work with somebody in an agency capacity. So you could work with them as a transaction broker. And a transaction broker doesn't have any of those legal obligations. They just need to treat everybody fairly and honestly in a transaction. So what's all right, I think that's it. So, so what determines whether you're going to be working as an agent or as a transaction broker? A checkbox on a form. That's it. However you choose to work. All right. Now, here is a section of the purchase or sales contracts that for 1 to 4 families that we prepare. Here's the section pertaining to section 35 is about attorney review clause. I got a screenshot here, and I made some notes here in red for you. Okay. How does attorney review work? Well, both parties sign the contract, and once both parties to the transaction sign the contract, the seller and buyer or landlord and tenant sign the contract, they have the right to have an attorney review the contract. So then we send it off to the attorneys. You have to do it within 3 days. If you don't, the contract becomes legally binding as it is. Okay. And then you can only make changes if both parties agree to those changes. So you send it off to the attorneys. Then one attorney will start off the process by sending out the disapproval letter, the notice of disapproval. Basically, it says, we received your letter. We received your contract for the purchase of 123 Main Street. We disapprove of the contract in its current format, but if you agree to all the following changes that we propose, we could conclude attorney review if you sign here, and then you'll be in a legally binding contract. And attorneys go back and forth like that. Now, attorney review can be done in an hour. It could be done in 3 days. It could be done in 3 months. So what's the whole idea behind this 3-day attorney review thing? Well, you have 3 days to start attorney review. Otherwise, the contract becomes legally binding as it is. And if you start attorney review, then each attorney has 3 days to respond to the last one's correspondence, unless the attorneys agree on lengthening that time frame to 5 days or 10 days days. Or if they pause attorney review, they could both agree to do that until the happening of a certain event or something. Like they need to get bank approval for something. So they're going to pause attorney review until they get approval from the bank for this sale, things of that nature. So first you start that study by the attorney. They review that contract within 3 days, and they make any changes and they send it off to the other party. They have 3 days to do this. That you count 3 business days. You don't count Saturdays and Sundays or legal holidays. And the notice of disapproval, that's where the attorney says, we don't like the contract the way it's written, so we're proposing some changes here. So only if you agree to those changes, we can conclude attorney review and the parties will be in a legally binding contract and we can move forward. But often the attorney receives it and says, okay, well, we're in receipt of your review letter, but this and this is okay, but we don't like this. We want it reworded like this. They send it back to the other side. They have 3 days to get back to them again. So 3 days, 3 days, 3 days. Attorney review can last 3 months, or more. It's just that to keep the ball rolling, they have 3 days to respond to the last one. Okay. Any questions? We all good? Crystal? All right. So here's that opinion 26 notice I told you about, that big old fear-mongering document that attorneys use to scare people into using an attorney. Okay. So what did I write here in red? Let's read my notes here. Opinion 26 notice must be the cover page of any contract prepared by real estate licensees, whether it's for sale or lease. So what kind of properties can we prepare? What kind of contracts can we prepare? Sale or lease contracts for residential properties, 1 to 4 families and single buildable lots, right? Okay, so we have to inform people they have a right to hire an attorney. If opinion 26 notice doesn't need to be used if an attorney is drafting the contract, because all it's doing is telling people they have a right to hire a lawyer. If you've got an attorney already, well, you don't need it. Okay, this is only when people are not using an attorney. So let's read this big fear-mongering document that just has the word notice up there and doesn't actually say opinion 26 notice at the top anymore. It says the law requires real estate brokers to give you the following information before you sign this contract. It requires us to tell you must read it all before you sign, and the purpose is to help you in the purchase or sale. Yeah, that's what it really is. It has nothing to do with an attorney just wanting to be involved and not losing business, right? All right. So this first section here, number 1, this is just what we refer to as a disclosure of agency relationships, where you select, I represent the seller, not the buyer not the seller, both the seller and the buyer, or neither. Okay. Then the rest, we continue on here, is talking about the fear-mongering of why you need an attorney. It says you will not get any legal advice unless you have your own lawyer. And neither I or anyone from the title company can give legal advice unless the title company has a lawyer on staff. Okay, so neither I or anyone from the title company can give legal advice to either the buyer or the seller. And if you don't hire a lawyer, no one will represent you in legal matters now or at closing. Neither I nor the title company will represent you in those matters. The contract is the most important part of the transaction. It determines your rights, your risks, and your obligations. And signing it's a very big step. A lawyer can help your feeble minds better understand it. I know it doesn't say that, but it kind of implies it, right? By saying this. So you can see it's a fear-mongering document. You really need a lawyer. So the contract becomes final and binding unless a lawyer cancels it within the following 3 business days. And if you do not have a lawyer, you cannot change or cancel the contract. What's this next word right here by my mouse? Unless, so you can't change it without a lawyer, right? So words matter. That one little word, unless the other party agrees. Well, I tell you what, even if you have a lawyer, you can't change or cancel a contract unless, you could cancel it, but you can't change a contract unless the other side agrees to those changes either. So what's a lawyer doing that you can't do on your own? Now, we can't do those changes to contracts after they've been signed by both parties, because then that is considered the illegal practice of law. Okay. We could negotiate, go back and forth with a term sheet and write the contract up once, and then that's it. We can't make modifications after both parties sign it. If only one party signed the contract, though, we can make modifications to it still, but we got to go back to the other party that originally signed it and have them initial next to any changes. You guys follow what I'm saying? Okay. Now, another important service of a lawyer is to order a survey. Stop. Can you order a survey yourself as a buyer? Can a real estate agent order a survey for the buyer? Sure, they can. And a title report, aka title insurance. Okay, do a title search and get title insurance. Little unknown fact: many attorneys also have an ownership interest in title companies. So who do you think they're ordering the title search from? The title company that they own, that they're making money on, right? So can we order title search and title insurance? Can the buyers order their own title? Sure. Or other important reports. The lawyer will review them and help you resolve any questions that may arise about the ownership and condition of the property. These reports and a survey can cost you a lot of money. That's true. And a lawyer will also prepare the documents needed to close title and represent you at the closing. Lies. Since they changed under President Obama, he created this new agency called the Consumer Financial Protection Bureau. And they changed the old HUD-1 document, which was the closing documents when purchasing real estate. They changed it to something called the CD, the closing disclosure, along with other forms. And it made it a lot harder to fill them out, because it requires a lot more information on them. It was supposed to be streamline the process and make it quicker to close, but instead it made it longer and more complicated. So most attorneys, they don't even do this. They just hire title companies and have them do it because they don't want to deal with the headache. So that part here where they'll prepare the documents needed, no, they'll hire someone to prepare the documents needed, and then they'll just guide you through where to sign and what this is and what that is. Okay. Now, a buyer without a lawyer runs special risks. Uh-oh. Sounds scary. Only a lawyer can advise a buyer about what to do if problems arise concerning the purchase of a property. I guess that's true because that's legal advice. The problems may be about the seller's title and the size and shape of the property. Well, I guess the surveyor can help you with that too. Or other matters that may affect the value of the property. I guess the appraiser can help you with that. If either the broker or the title company knows about the problem, they should tell you. Okay, they're talking about us now. Why are they talking about us? Uh-oh. But they may not recognize the problem or see it from your point of view. Oh, they're belittling us. That's what they're doing here. You dumb, dopey real estate agents, right? Or know what to do. And ordinarily, the broker and the title company have an interest in seeing that the sale is completed, because only then do they receive their commissions. Oh, so they're inferring here that we're not going to do the right thing just to make sure that we get paid and the deal closes? That's not right. What about the attorneys ordering the title and making money only if the deal well, actually, no, they make money either way. If somebody orders the title insurance, they get paid on it, but they don't disclose the fact that they have an ownership interest in those companies. There should be a disclosure for that. We need to rise up and propose legislation that attorneys that have interests in title companies or surveyors companies have to disclose that interest. That would be cool. So their interest, that's us again, their interest may differ from yours. Whether you retain a lawyer is up to you. It's your decision. The purpose of this notice is just to scare you into hiring one. No, that's not what it says. It says the purpose of this notice is to make sure that you have the information needed to make your decision. All right. And then the seller sign and dates, and then the selling broker signs and dates. They should have the selling broker signature on this side, though, because who is the selling broker? It's actually the buyer's agent. Why don't they say that? Why do they call him the selling broker and have them underneath the seller's signature? It's so confusing. Because an attorney made it up. Because I guess they figure you're the one that got the buyer, so you're the one that procured the sale, so therefore you're the seller's agent. Okay, you're the selling agent. Okay, this is the only document where that language is referred that way, where a buyer's agent is referred to as the selling broker. Okay, it's on the opinion 26 notice, and then the buyer's sign and date here too. And that's the opinion 26 notice. And what is the opinion 26 notice? What is its purpose?
To let you know that you have the right to have an attorney, but you don't necessarily need one.
Yeah, well, it doesn't tell you that part. It just tells you you have the right to hire.
Okay,
Yeah.
Do we need to have this signed by both, like, do we need to give an original and a copy of this also?
Duplicate originals.
For everything?
For everything. All disclosures and contracts. Yep.
Okay, thank you.
What's the document we give to property owners at the time we get a listing that we've gone over so far?
CIS?
Well, that we give to everybody. What is the CIS, since you brought it up?
Consumer information statement.
And what's the purpose of the consumer information statement? What information are we providing to the consumer?
terms.
Our services for them?
The different ways we could work with them.
Oh,
Buyer's agent only, seller's agent only, disclosed dual agent, designated agent, or transaction broker. What's the document that we give to owners and only the owners about discrimination?
Attorney General memorandum.
The Attorney General's memorandum. Correct. All right.
Attorney General memorandum.
Yep. It's about New Jersey laws against discrimination as well as the federal laws. It tells them
Can you repeat that?
It's about the New Jersey laws against discrimination as well as the federal laws.
But that's only for owners?
It's
Or
only
rented?
required to be given to property owners, because if they're
Owners.
offering their property for sale or lease, they cannot discriminate. They need to follow both state and federal laws pertaining to discrimination.
So
what
we
that's
give that to them. Okay.
only to the property owner. Correct.
Okay.
And all right. So this is once again about that paragraph that needs to be added into contracts that we prepare if we're making offers on properties that are not listed by real estate agents. They didn't get all the required disclosures and such. So they didn't have a listing contract that would have told them that price fixing is illegal and all that. So we have to put that price fixing disclosure statement in the contract for purchase that basically says, because in that contract, we're going to say, hey, the seller is agreeing to pay us a commission of whatever amount. So we also need to put in there, as seller, you have the right to individually reach an agreement on any fee, commission, or other valuable consideration with any broker, and that no fee, commission, or other consideration has been fixed by any governmental authority, any trade association, or multiple listing service. Basically,
We have to add that to the contract?
Yes. Yep.
To which contract exactly?
Sales contracts, lease contracts, whatever.
Okay. Actual disclosure. Okay.
Yep. That's only when it's a for sale by owner. And
only
they
for sale by owner.
Yeah, when they didn't lease, whether an owner is selling or leasing their property and we're bringing a buyer or renter to them and they never had a listing. Because they didn't have a listing, they didn't have a real estate agent go over these disclosures with them that you normally do when you get a listing. So we have to write it in the actual sale or lease contract that our commissions are not fixed. We don't engage in the illegal practice of price fixing, which is against federal and state laws. The federal law is the Sherman Antitrust Act, which makes price fixing illegal. And what is price fixing? It's when agents from competing firms conspire with each other to try to set a standard fee for the services that they perform.
Okay.
So that's why you're not going to ask me what's the standard commission. What's the standard commission rate you charge? I mean, you could ask what's the average out there. Well, that's different. We could look at numbers, because different numbers from different people, and we could see what the averages are. I would say the averages are probably around 5.5% overall. But it's all negotiable.
And in commercial, 2%?
Same thing with commercials, all negotiable.
5%? Okay.
Could be 10%.
Okay. Wow.
You could also structure it in different ways. Commercial agents got savvy ways of structuring things, because their leases often are very long term. They're for many years even. Like we're negotiating a lease for a company to lease a building or a section of a building. It could be a 10-year lease, right? And it could be in a strip mall or something, and say we're negotiating a 10-year lease. So what commission would you charge on a 10-year lease? Fixed dollar amount, or how would you structure the commission? Most real estate agents for residential properties, they charge 1 month rent as the commission, and that's split between the two agents, right? But why not do it like commercial agents do? 10% of the term. So if it's 1 year lease, you get 10% of whatever the annual rent is. It comes out to a little bit more than 1 month rent. Okay, just so you know. But if it's like a 10-year lease, 10% of the term. So, but you don't get that all up front. You're going to get a check. If you got a 10-year lease with somebody and you're charging them 10% of the term, every year you're going to get a commission check for the next 10 years. That's the way that it works. Okay, that's how commercial real estate generally works. But is there anything that says you can't charge that on residential real estate? Sure, you can. However you want to structure it and negotiate it with your client. Okay. And the thing is, you don't got to sit there and have a big conversation with your client about, can we charge this much here? We're going to do it this way. You'll never sell a damn thing, and they'll always undercut you. You're better off just filling out the contract. This is what we're charging in commission, and sign here. So you point out to them what you're charging them. You're not hiding it. But you're saying, this is the fee, this is what we're charging, and here's where you're going to, and here's how long the listing is, and here's where you're going to sign. Sign there. Do it that way. Because if you're like, well, this is the commission, is that okay? Or did you want to negotiate on that? What are you doing? You got to learn sales. You got to learn how to sell it. You're not going to sell nothing doing that. And don't sit there reading a contract word for word for people. Do that on your own time. Read the contracts. I'm providing for you samples of these contracts that we actually use in business. I got them in the shared Google Drive there too, and they're here in this book. Read them. So now when you deal with clients, you don't have to read it word for word. You can say, okay, this section is about this section is about that. You basically give them the rundown, a summary. It's not a bad idea for you guys to do this, so you don't even have to do that. What I do, if I got somebody that's looking to buy a house or lease a property, I often do this. I print out a blank contract for them and all the disclosure forms and everything. And I say, here, before we ever go out looking for properties, here's a copy of all the disclosure statements, all the contracts and everything that you will be signing when we find you that perfect house that you want to buy or rent. So you could review, you could look them over on your own time, look them over, talk about it with your attorney, And when I do that, I found that people don't ask me any questions anymore. And I just say, you can even bring it up to them later. You say, so did you get a chance to look over all the contracts and stuff that we're going to be signing? And now I'm just going to be filling in the blanks later. Right. So it's not going to be a shocker for you what you're signing. You just got to look at what I wrote on the blanks. And then that's the only difference. Okay. So did you have a chance to have an attorney review it with you and stuff? And often they're like, oh, yeah, it looked okay. And they didn't, you know. But this is the way. I'm just trying to give you guys a little business advice here in sales and how to get things signed, because I know how nervous new agents get when they're dealing with clients and such. And they sit there reading the contract with word and word, and they're going to spend the 3 hours explaining it to them. They're going to be falling asleep, and they're going to, where do I sign? Where do I initial? Okay, so what is price fixing again? You need to know for exams. What law makes price fixing illegal? Sherman Antitrust Act. There you go.
Sherman Act, antitrust.
Sherman Antitrust Act, just like the Sherman tank, right? Sherman Antitrust Act. So what is price fixing? Well, it's an agreement between competing firms to establish an industry standard on commission rates charged to the public. So what should you do as a real estate agent if another agent comes to you from a different brokerage and starts a conversation with you, just casual conversation, about how much do you charge for commission? How do you go about charging your clients that? What's your strategy? Okay. What should you do? Immediately separate yourself from that, disassociate yourself from that conversation. And then you'll be okay. All right. So it's prohibited by federal and state laws, the Sherman Antitrust Act. It prohibits price fixing and allocation of markets. What are allocation of markets? It's within your own brokerage. Let's just say your broker assigns agents territories. Now, this isn't common for them to do anymore, but in some sales and different types of sales, some people have salesmen have territories, protected territories. This is your area. That's your area. You're the agent for that area. These days, when it comes to real estate brokerage, your broker don't care as long as you get listings. So allocation of markets is when you're colluding with. Collusion means you're just working with somebody. That's what collusion is. Okay. You're working with somebody, but you're working with somebody you're not supposed to be working with because they're the competition. Okay. When you work with the competition to try to divvy up the market share. Yeah, this is our area of town. That's your area of town. Or we both agree not to charge commissions less than a certain amount. In either way, they're both anti-competition. Right? Because only one company has that area of town, and you've agreed with each other that you're not going to step over that boundary. So nobody in that area can get another agent other than one from this company. Okay. So that's why it's illegal. Okay. It's anti-competition. And it's also prohibited by the Real Estate Commission. And here's what the penalty is for violating the Sherman Antitrust Act. It's a misdemeanor crime, punishable by a maximum $1 million fine and up to 10 years in prison. It's a hell of a misdemeanor. Jeez, you got people carjacking and raping people, and they don't get that much time in prison these days.
Right.
During lunch hour, I seen that there was one of these kids. He was a minor kid. It was in the news because he was an illegal alien, but he was a minor. He came in as a 17-year-old, I guess, and signed himself up for school and decided that he was going to be inappropriately sexually touching the girls in the schools. And he did it to about 7 or 8 of them. And he got charged, and the prosecutor only charged him with, this is where politics comes into play. Everybody got their agendas. Instead of looking at criminals and the crimes they do, he only got charged with 180 days in jail. And he was only asking for 90 days or something like that. It was some ridiculous number and time served because he was just squeezing in our butts. It was a little bit more than that because that's not even what it was, But anyway, 10 years in prison for this, but actually sexually assaulting somebody, you get 90 days. Yeah. See what I mean? Mess around with people's money, you going bye-bye. All right. Moving along. Sherman Antitrust Act. If you want to skip forward to page 55 for a moment, we could do some highlights there, and then we'll come back. This is a law that was passed in 1890 to encourage competition and to prevent certain anti-competitive mergers, fixed prices, divided markets, and rigged bids at auctions. The Federal Trade Commission Act created the Federal Trade Commission, and the Clayton Act addresses mergers and monopolies.
Is this on page 55?
Yes, it is. It's where it says antitrust laws. That's where the title, it says antitrust laws there. Find it?
Yes, thank you.
You're welcome. So let's do these highlights. I'll save my breath because I already said this about quite a few times.
You want us to read? We could read.
No, that's all right. No, that's all right. I'm just gonna kill my voice talking all day long, you know.
Oh, geez.
It gets to your throat after a while. I usually have a spray. It's like a lube for your throat when you're a speaker or a singer or whatever. I think I got it out in my truck. I do have some Chloraseptic, but I don't like that stuff. It's not, oh wait, here it is.
And now you're joining politics. You have to speak.
You really don't got to speak that much, you know. It's a the council member. I'm actually running for council president, but it's only during a meeting once a month, you know. So it's the second Tuesday of every month, you know. But so it's not that much you got to speak. Me. There we go. A little honey for your throat. All right, everybody good? Everybody got it? All right. And then when we continue down here, they continue talking about what allocation of markets it means, dividing up the market share. And they also talk about bid rigging. And I don't know why they're giving examples here from California. This is a New Jersey book about New Jersey classes. I could give you an example of somebody right in Edison. There was a real estate broker right in Edison that was involved in going to auctions for banks. And he was involved in a bid rigging thing. The Real Estate Commission actually revoked his license for life, but his real estate brokerage is still open. His brothers, who also have broker's licenses, just took it over. So that's interesting. Wonder if the same practices are going on or not. So this one talks about how in California, real estate investors were sentenced for their roles in conspiracy to rig bids at public real estate foreclosure auctions. Their sentences include up to 6 months in prison, years of supervised release, and criminal fines ranging from $500,000 to $1.2 million. 9 real estate investors in Mississippi were sentenced for similar crimes in 2019. And individual firms, however, established their own fee schedules and allocate market sales territories between their own salespeople, and that's perfectly fine. The problem comes into play when you're working with the competition, agents from other brokerage firms, to divide these territories and allocate markets and set prices. Your own broker can have training, role playing even with you guys. One pretends to be a seller, one of you is the agent. You could do role playing to try to do the conversation, to get comfortable with it, about how you would try to get them to pay a certain commission or whatever it is. Okay. That's perfectly fine. Your office can have a policy that you don't charge less than a certain amount of commission, or this is the amount of commission that you charge. And that's perfectly fine. Commissions are negotiable in New Jersey. Your office can have their own policy on what they charge, as long as that fee has not been negotiated with the competition, right? So violations only occur when competing firms agree to act together in these matters. That's why I got that highlighted here. And criminal penalties up to $100 million for corporations and up to $1 million for individuals, and 10 years of imprisonment. The FTC, the Federal Trade Commission, created the Federal Trade Commission. The Federal Trade Commission Act created the Federal Trade Commission, and the Clayton Act addresses mergers and monopolies. And under the Sherman Antitrust Act, people who fix prices and allocate markets may be found guilty of a misdemeanor, punishable by a maximum $1 million fine and up to 10 years in prison. And in a civil suit, people who have suffered losses can recover up to triple the value of the actual damages and costs. They call that treble. Treble is triple. All right. Okay, let's talk about business and agency relationships. Before, I already told you what are the different, how do we disclose business relationships to the public? The CIS form, the Consumer Information Statement. And who do you give it to? Anyone you intend to do business with. It's just not required for short-term rentals less than 125 days or for commercial transactions. So it's only required for residential transactions, for sale or lease. And you're just disclosing to everybody who you're representing in the transaction, right? Buyer only, seller only, both, neither, etc. All right, so we have these BSAs, brokerage service agreements now. We used to have exclusive buyer agency agreements, which now they're included in brokerage service agreements. It's kind of like, can you imagine for a moment, you're in a relationship and your significant other is bound by a contractual agreement that they're not going to cheat on you. Otherwise, they have to pay you a hefty fine. Can you imagine? Well, think of
Just
business
like marriage.
relationships in the same way, huh? Well, marriage, yeah, but marriage doesn't have written in advance usually, unless you have a prenuptial agreement, I guess. You know,
That's why we should have them.
yeah, and they don't necessarily have, especially poor people. They need it more than the rich people do. Rich people, it's not a thing to be like, here's $1 million, now go away. You know, for us, we probably go broke paying for the attorney's fees in divorces and such, right? That's why I did mine on my own. All right, so either way, think of these business relationships like we do our personal relationships, and then you could get a better grasp and understanding on them. You know, an exclusive buyer's agency agreement. It's like your significant other is signing a contract to be exclusive with you, that they're not going to cheat. We're not in a swinging relationship or anything. It's just you and I. That's an exclusive relationship, right? So we're going to have an exclusive buyer agency where the buyer says they're only going to work with you and not any other agents. And you are going to dedicate yourself to them, okay? Work in their best interest. So this agreement would disclose also what the fee is and who's paying it, whether it's the seller or the buyer, and how much it's going to be. And what areas that they want to look for properties in. Okay. And if they're okay with you not showing them properties where the seller's not paying the commission because they don't want to pay that high fee. See, this could save you from a discrimination lawsuit. How you figure? Well, just say for a minute that I'm out there showing you properties. You're a buyer, you're looking to buy a home. Where do you want to look? I don't know. What's a good area? Uh, the term good area is very subjective. What's good to you may not be good to me, and vice versa, right? So be careful about those traps, those ones that are subjective. So if somebody says they want to be in a good area or whatever, you ask them, well, do you have an idea what areas those are? If not, I'll show you properties in different areas and you decide which ones you want to be in, and then you could search for homes in random areas just to get them looking in different neighborhoods in different areas. Let them tell you which is okay, which one's not. Okay. Because we don't want to be accused of something called steering. Steering is when you, as the real estate agent, no matter if your intention is the best of intentions and most honorable intentions, when you're the one that makes a decision where somebody should live, that is a discriminatory act called steering, and it's illegal. Doesn't matter if your intentions are the best of intentions. You have to leave it up to the buyers to decide where it is that they want to live. Okay. Otherwise, you could be like, yeah, you don't want to really be in that area. Or, you know what? Try going in that area and buying diapers at 10 o'clock at night to those local stores and see if it's an area you really want to be in. That's a way of trying to discourage people or scare them about certain areas. Okay. And people should be able to decide where it is that they want to live. Let them figure it out on their own. I know you may know what a good area is and what a dangerous area is, but and they come to us and they seek our advice that way. But the way the laws, the anti-discriminatory laws are written, and the way the people will come after you for discrimination, if they think that you're trying to steer them, or even if they got a bug up their butt about you for something, they just want to get you in trouble later on, they could turn on you and say, you know what? You told me that this was a rough area and to stay away from this area. And it's like, oh boy, I'm screwed. I'm going to get sued. I'm going to lose my license. I'm going to get fined by the real estate commission because now you're guilty of steering. What is a good school? You would think that a good school is something easy to figure out, right? Well, what is a good school? In your opinion, what's a good school? What makes a good school? What makes a good school, in your opinion? What factors would make up a good school? You get clients all the time. They say, well, we want to be in a nice, safe area. We want to be near good schools. What's a good school? That's the question you should ask them. Don't be shy about throwing the question back on them. Well, what do you consider a good school? What is it you're looking for in a school? Okay. Because if you don't, you're the one making the decisions. And believe it or not, I would think that a good school is not a subjective thing because, low student to pupil, low student teacher ratios, so that you don't have huge classrooms. The students get a little bit more attention. High pass rates, great scores on their graduation and their testing scores and all that stuff, right? They could graduate and you know how to read and write and do math and stuff, right? That's a good school, right? Well, other people say, well, no, my priority would be more of cultural diversity and extracurricular sports activities. So it could be different priorities for different parents. So you got to not make that decision for them based on your own interpretation of what a good school is. Let me give you another example, because this could happen again in the future. When President Obama was first elected, he took down all school report cards in every state. He said they can't post it. The Department of Education gave an order. They cannot post school report cards anymore. The school report cards that show graduation rates, teacher student pupil ratio, and all that stuff. He said there's so much information there, people can misuse it and it could be misinterpreted for discriminatory reasons. So until we come out with a new standard about what exactly we're going to disclose and how we're going to present it, no information can be posted. His entire first term, they never came out with that new standard, but all the information was taken down. And in the meantime, I got me a client that wanted to buy an expensive home. They were looking in a high price range, but they were looking for certain extracurricular activities for their kids, certain criteria in the towns, needed to be near train travel to NYC because that's where they work. And they wanted good schools. And I was like, shoot. So at the time I was still married. So I asked my wife, who was in education, I asked her, I said, how do I find out? Oh, there's no report cards anymore. The government took them all down. How do usually I just provide that information to them and they let me know. And she was like, well, you could go to the Star Ledger website and they have posted their blue ribbon schools and rankings. Okay. This is when the blue ribbon school stuff just started though. The blue ribbon school rankings just started. So I searched for homes. I didn't even do a search for homes yet. I just wrote up a bunch of towns that met all the criteria with the types of schools, the extracurricular activities, the types of stores downtown, near the trains and everything, near blue ribbon schools. And I submitted the list of towns to the guy, and he got that piece of paper and he was like, what's this? And I was like, well, that's the list of all the towns that meet your criteria. They have the good schools, extracurricular activities that you're seeking. And all those schools, all of those towns have blue ribbon schools. And he did this. I don't want to see any of this blue ribbon school bullshit. He was like, do you even know what a blue ribbon school is? Good school was my reply. And he's like, well, if you go to the Star Ledger website, now he's educating me. He was like, if you go to the Star Ledger website, you could see a ranking of the blue ribbon schools and everything. But there's actually a word down there beneath it before you do the search. It says data in the fine print, and there's a little blue asterisk next to it. If you click on the asterisk, it tells you how much weight they place in different topics of what considers a blue ribbon school. And do you know what they put the most weight in? It's not graduation scores or test scores or any of that stuff. They put the most weight in how much funding the school gets from the state and federal government. So subsidies is number one. So money was the top thing that they put the most weight in, whether it determined if it was a blue ribbon school or not. The second highest ranking was cultural diversity. And sure, I want my children to be familiar with different cultures and everything, but that's not my priority. My priority is that they learn science, how to read, how to write, learning math, all that other stuff is fine and dandy, but I want them to have a good education above all, And so he was like, I don't want to see any of this blue ribbon school BS. Now, the blue ribbon standards have changed a bit over time. They've evolved. They improved a lot from then. But either way, this is the only thing that I had to go off of when I was talking to this client. And needless to say, he didn't use me as his real estate agent. And I was like, damn, I should have pushed back, and because I was excited to get this guy who was wanting to buy us several $1 million home, so I was just like, yes, sir, yes, sir, yes, sir, but that's not the way to do it. You got to push back on them, ask them questions. Well, do you have any idea what towns those are that you want to be in? Good schools. Do you have any idea what are the good schools and districts that you would consider to be in? Now, I just assumed, because this guy told me he was from out of state, he wasn't familiar with the area, but he ended up being familiar with the area because after I put all that hard work into this, trying to find the towns for him, apparently he got a lot of information from coworkers and did his own research. And so he knew what areas he wanted to be in. So my bad, push back, ask questions, probe, put it on them. It's not your decision what a good school, what a good area, etc. is. That's up to them to decide and to make. And they usually have an idea, even if they're not from the area. Okay. So enough of that. This is actually more of chapter 4 stuff on discrimination. So, but either way, that's I told you an exclusive buyer's agency agreement could prevent you from filtering out like the bad areas and for the good areas, you know. But they told you to find a good area, but it's subjective. And now a lot of real estate agents, they may search the MLS and look at how much commission is being offered, and their eyes go to that. And they'll only show the properties that are paying them the most commission, and they're filtering them out that way. Which, by the way, now the MLS does not post that information anymore as of that NAR lawsuit. But they used to. And that's what agents did. Their eyes went down to the commission, how much commission is being offered, and they'd only show the listings offering the most commission. Now, if you could draw on a map where all those properties are that are offering the highest commissions, and it was only on this side of town and not on that side of town. So now if a client finds out that I've been only showing them properties that are available in their price range that are only on this side of town, they could paint a picture, a pretty good picture, that I have not been showing them properties on this side of town. Now, my intention was only because of the money, because I was looking at who was offering the most commission. But couldn't they paint a picture that I was steering them out of this area because I didn't show them a single property in that area? I was only showing them over here, even though it was only over the commission deal, you know, which I should not be looking at because that puts my interest first above theirs. You got to always keep your client's interest above your own. But they could point out that I maybe was discriminating against them, like I was steering them away from a certain area. And just the practice of steering is illegal itself. So if you had an exclusive buyer's agency agreement where they said, don't show me properties where the seller's not paying the commission or where the commission is below a certain amount because I would have to pay the difference. Don't show me those. Now I can legally filter them out. So even if they could paint it on a map that I didn't show them properties from a certain area, I could be like, yeah, well, you told me not to because those are the properties that are not offering to pay the commission or they're not paying over a certain amount. Okay. Then you could legally do it that way. So you can use either the old style exclusive buyer's agency agreement, or they now have it built into a brokerage service agreement. And these brokerage service agreements talk about the type of commission. I got sample ones in this shared Google Drive in those supplementary folder that has all of the contracts and forms that we use. I'm not actually going to go over them in class because it takes way too much time. I did create a video with another class. I'm going to separate out that video and post it on YouTube and on our Facebook page so you guys can get that full education if you wanted. But I'm not going to give the full description here in class because it could take a whole day just going over all those forms. So I'll just explain them to you. And then your brokers can go over them with you and train you for that in your offices when you actually get your licenses. Okay. And then we have the brokerage disclosed dual agent. Disclosed dual agency, there's nothing wrong with it. It's perfectly legal where you can represent both the seller and the buyer in a real estate transaction, or your office can have one agent that works with the buyer and one works with the seller. Either way, your company is representing both parties in the transaction. That either one of those scenarios is considered dual agency, and there's nothing wrong with it as long as it's disclosed in writing to both the buyer and the seller. Undisclosed dual agency is illegal. As long as you disclose the fact that you or your agency is representing both parties in the real estate transaction, perfectly fine. If you don't disclose it in writing, it's illegal. It's called undisclosed dual agency. You'll need to know that for exams. You will get questions about that on exam. So how do we disclose it to sellers or to property owners and to buyers or renters? Well, we have them sign what's called a written informed consent to dual agency. And now we also have those designated agency, and we also need to have them sign written informed consent to designated agency agreements as well. And that's what I wrote down here, which is nowhere in this book. It'll probably be in the next version book. See where it says designated agency down at the bottom? You may want to snap a screenshot of that because it's not written anywhere here in the book, and it's a new type of agency that was added in New Jersey now. This was never previously a type of agency in New Jersey. It's new. That's where the broker acts as a dual agent because it's his company that's representing both parties in the transaction. But the broker designates you to work as a buyer's agent and another agent to work with the seller in the office on the same transaction. But you're keeping your businesses separate. One's working only as a buyer's agent, one's only working as a seller's agent, and the broker's making sure that you're representing your client only as a buyer's agent and only as a seller's agent. You've been designated to work that way. Thus, the term designated agency. Okay. All right. So nothing in the law says you can't, that you need to work in an agency capacity. You could work as a transaction broker. That doesn't represent anybody. They just act as a manager of the transaction, putting the parties together and doing whatever is necessary to make the deal happen. So they don't owe fiduciary duties to anyone. Like one of those fiduciary duties that you owe to clients when you're working with them as an agent is confidentiality. Anything they tell you in confidence, you have to keep your mouth shut, keep it to yourself. If you're working as a transaction broker, you could spill the beans if it's needed to negotiate to make the deal happen without getting your client's permission. You don't have those legal fiduciary responsibilities to them to keep what they told you in confidence. Okay. So under certain unusual circumstances, a broker may act as an agent for one party and a transaction broker to the other. It's another option, such as when one party refuses to offer a disclosed dual agency. They don't want you to work as a dual agent. Well, we got this new type of practice, which is designated agent. So that's one workaround. Or you could work with them if they don't want to sign any agency agreement as a transaction broker. Okay, I'm not representing you, but I'm going to do what an agent requires, make the deal happen. All right. CIS, the Consumer Information Statement. I already told you guys about this, but now we got a slide with perfect notes for it. Snap a picture of these slides. These are your notes. Okay. Otherwise, nowhere in the book is it so clearly written explaining what the CIS form is. Okay. I got it all right here for you. The CIS, Consumer Information Statement. There are four. The CIS, the Consumer Information Statement. There are new versions of this form, which you could click here or here to find them in the Google Drive, and you could download them, or you could get it here from the MJAOR, which is the Mid Jersey Association of Realtors. You could go to their website, and they have here the law against discrimination, the Consumer Information Statement, New Jersey's Consumer Protection Act, information about all kinds of stuff like that. Or right here in the shared Google Drive. You click on that, takes you to the drive where you could then download the CIS form, the Consumer Information Statement, which talks about the different types of agency and what that means as a seller's agent, buyer's agent, disclosed dual agent, or designated agent, or a transaction broker. It's like a big definition sheet that you give them, and then they sign and date that you gave it to them. Okay. And I'll give you this direct link about those things. There you go. That's the CIS. All right, so a CIS is a disclosure of business relationships describing how your agency intends to work with or represent someone in a real estate transaction. It's the first thing. You notice how I got that big, bold, highlighted there, underlined? It's the first thing. It's the first document you give to anyone you intend to do business with. It's required.
And
Yeah.
attorney.
No, the Attorney General's memorandum is what you give to property owners at the time you get a listing. Before you ever get the listing, when you first meet somebody, say, hi, I'm a real estate agent. You give them a CIS form that says how I intend to work with you as of right now. Okay. And then we could work towards getting the listing. And then when you get the listing, you give them the Attorney General's memorandum that tells them that they cannot discriminate if they offer their property for sale or rent, whether they hire you or not. They need to follow those laws. Okay, so according to the Administrative Code 11.5, before any discussion of any motivation or financial situation is initiated, the CIS form must be given to and explained to the party. So what if you're at a party and somebody starts asking you questions about real estate? They find out you're an agent and they're probing you about, hey, I may be looking to sell my home or maybe looking to buy one, you know. Now you're talking about real estate. Technically, you're supposed to start explaining to them the different ways that you could work with them. That person's going to probably walk away from you. And I highly doubt that you got this form sitting in your back pocket or your pocketbook, right? So the advice is the next first in-person meeting, you supply them with the CIS form. Okay? Just tells you the different ways that you could work with them. And why is that? Well, before I start talking to you about these real estate matters and you start disclosing to me what you can afford and what your urgency is and your need to move, sell, or buy, wouldn't you want to know if I'm going to be representing your best interest or someone else's first? Right? So it's a disclosure of who you're going to be working with, who you're representing, and how you're working with them. You know, before you open your mouth and start disclosing, hey, I'm in a hurry to sell, I'm in danger of foreclosure, I need to move before the kids get enrolled in school, and you know, otherwise it's going to be a whole urgency thing, you know. And then, you know, people are compromising their negotiation stance as well. So it's only required for residential transactions. It's given to owners, buyers, and tenants. It's not required for short-term rentals of less than 125 days or for commercial transactions. And if you want to customize this form by putting it on legal size paper and folding it up as a flyer, keep in mind you cannot change the wording, and the text font must be a 12-point font size. The law requires that. The law specifically says the font size cannot be smaller than a 12-point font size on this disclosure statement. Okay, it can't be fine print that they need to bust out with a magnifying glass to read. Okay, okay, there's been some updates with that NAR lawsuit, and New Jersey made some changes. So as of this rec update from the Real Estate Commission, looks like an email, right, to brokers of records from the Department of Banking and Insurance. It was posted on their website, Division of the Real Estate Commission, Bulletin 24-11, changes to Real Estate Broker and Salesperson Act. Okay, licensed business relationships, including designated agency, which was added to the law in New Jersey. Consumer information statement has been changed to add that designated agency agreement. There are brokerage service agreements now in place that you are required to use when working with buyers, sellers, landlords, or tenants. Discloses who's paying the commission, how much that commission is going to be, if it's allowed to be split with the other sides, how long the contract is that they got to work with you. The property disclosure statement has been updated to include all kinds of climate change nonsense about flooding, okay? Because, you know, our politicians know that we're all going to be underwater by year 2030 or whatever the hell it is, right? In the meantime, they can't predict the weather, what it's going to be like at the end of the week, but they'll tell you that you're going to be underwater by 2030, you know, because climate change. And so they spend millions of dollars buying beachfront properties. Go ahead. What did you have to say?
Can you go back to the last slide? I would like to I missed it.
Sure. Take a screenshot.
Thank you.
You're welcome. Don't forget, all of these notes are also in that class notes Word document that has all the links in it as well. I also have all these explanations there.
Also, the slides are available to us.
The slides are available to you, but I also have the notes. There's a class links and notes document in the same folder in the shared Google Drive that
Class
has
links are not opening. It shows a blank page.
what's not opening.
Class links.
You download it. Don't try to open it. Download it because the file may be very big.
Okay.
So download it, and then you'll be able to open it from your computer.
Okay.
Because that's all the slideshows for all the chapters. Okay. And let's see. So what else? What are the other changes they made here? Broker compensation. Signage at open houses is required now. We're required when we host an open house to have a sign that says to people that walk in the front door, hey, I'm a real estate agent sitting in someone's house. Who do you think I'm working for? Take a wild guess. Who hired me? Why am I sitting in this house? I'm working for the seller. So even though you walk in this front door and I'm being most helpful to you, I don't represent you. I represent the seller. But if you want, I can represent you too. That's basically what the sign says. Okay. Because apparently people are too stupid to realize this, and we need to make it glaringly available to them that you walked into this open house and I just happened to be sitting in the house. I work for the seller, and even though you walked in that front door, I could work with and represent you too. So apparently we needed to make that clear. So now there's an open house sign that requires us to say that. So here's an example of one from All Jersey MLS. They put their logo on it, but you could have it unbranded or put your own logo. It basically says, this is to advise that the agent is conducting this open house represents the seller and is required by law to promote the interest of the seller. Any information you give this agent is not considered confidential under New Jersey law and could be disclosed to the seller of this property. You, as the buyer, are entitled to have someone represent you as a buyer's agent if you are interested in this property. And the duties of a buyer's agent include helping you evaluate the property, prepare an offer on the property, and negotiate in your best interest. If you are a buyer, if you as a buyer are already exclusively represented by a buyer's agent, you are required to disclose this representation on the sign-in sheet. You have to have a sign-in sheet at the open house. If you, as the buyer, are not already exclusively represented by a buyer's agent, please advise the open house agent is not precluded from being a disclosed dual agent or designated agent and can enter into a relationship with you as explained in the CIS form. So, do you have to have the CIS forms available at open houses? Yes. You have to have disclosed dual agent and designated agent forms at the open houses. Yes. You have to have a sign-in sheet at the open house. Yes. And you have to have this poster, open house sign, whatever you want to call it, there as well. It basically tells people, hey, dopey, you walked into an open house. I represent the seller. I was hired by them, in case you didn't know, but I could also work with you. Okay. That's basically what it says, right? In a nutshell, in a long worded way. Oh, that's in the shared Google Drive too. If you guys want a copy of that, I could share that with you as well. Let me just go back there. Boom. That's that open house sign. All right. And so here's the actual bulletin on the law and the changes in the law. Let me give you a copy of that CIS form. Did I already give you that link? If I didn't, let me give it to you now. This is the CIS form. And let me close that out. I gave you the open house sign. And here's the property condition disclosure report. I'll share that with you. Property sellers, property condition sellers, property condition disclosure. So all sellers are required to disclose to potential buyers the condition of the property, if they're aware of any issues or not. Okay, here is that seller's property condition disclosure statement. They got to disclose whether, well, they could put the property address, the seller's information, tell you that, you know, you should get a open house. Hold on a second. I got to disconnect my cell phone from my computer because it keeps popping up text messages from annoying people that keep sending me, keep having a conversation here. So sorry about that. There we go. Sorry about that. Okay, so the seller's property condition disclosure. All sellers are required, property owners are required to disclose any information they're aware of their house, whether it's material information, which is not negative. It could be like how many bedrooms, how many baths, but it could also be the type of heating, the type of cooling systems, any issues that they had, or any improvements that they did on the property. And basically, there's a disclosure up here that tells you, hey, seller's required to disclose all this, but you should also get yourself hire your own home inspector. You know, so for your protection, get a home inspection. Okay, and then it has questions here about the occupancy, the age of the house, the seller living in it or not. Can you guys see this at all, or is it too small for you to even see it? Okay. The roof, questions about the attic's basement and crawl spaces, questions about termites, wood destroying insects, dry rot and pests, structural questions, any additions or remodels, plumbing, water and sewage questions, about heating and air conditioning systems, wood burning stoves and fireplaces, questions about the electrical systems, land, soil, drainage, and boundary lines, questions about environmental hazards, deed restrictions and special designations, homeowner associations, condos, and co-ops, a bunch of miscellaneous questions, questions about radon gas. You guys know what that is? It's an invisible, odorless, tasteless gas that'll kill you. Well, it causes cancer. Okay, it's a radioactive gas. It's not man-made. It comes from the earth. Yes, Mother Nature wants to kill you. No, there's a lot of things dangerous in our environment that are not everything hazardous is man-made, you know. Yeah, you ever see a volcano? You know, they could kill you. You know, radon gas is another one of those things. It's from decomposing radioactive rock. It could be rock. It could have already broken down to soil and it's in the soil. And the gas and the is radioactive and it comes up, you breathe it in, it gets in your lungs, and it could cause lung cancer. It's actually one of the leading causes of cancer that most people are unaware of. Radon gas. All right. You know, if you got it in your house, I'll show you how you could find out later on. I'll show you what the risks are in different areas. But yeah, if you got it in your house, you should install a radon ventilation system, and because it's cured by recycling the air, getting the bad air out, getting the good air in, not allowing the air from under your foundation get into the house. Okay, because that could contain nasty stuff like radon. Okay. Anybody got a basement in their house? What do you do with your basement? Is it just a laundry room, or do you also have a man cave down there or something, or a playroom for the kids? You know, what do you do with your basements? You know, so how often do you open your basement windows? Better question. To get that ventilation in there. Most people, those windows are painted shut, or they're probably like, I never opened them. Can't even open them now. you know? Well, then any gas that's coming into the porous concrete floor, or if you have French drains or a sump pump without a tightly fitting plastic cover on it, radon gas could be entering into the house. If you're on well water, it could actually come in through the water. And when you shower or run the water, it comes through that. And you could be spreading radon gas throughout the house. So we'll go over this in chapter 5, I think it is, or somewhere around there. And we'll go over this stuff in detail. Major appliances that are included or excluded from the sale. Is there a chandelier, etc.? We got a bunch of questions here about solar panel systems since they're becoming popular. Water intrusion. Is there any known water intrusion? You know, because we've had some flooding, and so they want you got to disclose whether there was a flood, if there was any insurance claims of flooding, or in the parking areas of whether it's an apartment building or a single family house. They want to know about it here. And then they explain to you the flood risks. Here's where they're the fortune tellers telling you that because of climate change, by the year 2050, they moved it back to 2050 now. By 2050, you're going to be 2.1 feet above year 2000 sea level. Okay, so the sea level is going to rise 2.1 feet by 2050. You know, they've been telling us this since the 60s. I'm serious. These climate alarmists, I'm going to call them, have been. Does the climate change? Yes, it has since the beginning of time. You know, we've had ice ages, we've had hot periods. You know, the Jurassic periods. You know, climate's always changing. We got 4 seasons here in New Jersey, right? Not all states have that. So climate does change. Is it getting worse? Well, the media and certain politicians would have you believe that, but no, it has not. You know, we see these extreme weather incidents that happen where flooding happens, people die, and you know, they're like, we've never seen anything like this. And then you find out, if you look online, you could able to find out, yeah, that actually happened in the same town about 20 years ago, the same flood, you know. But so now we have to disclose this, though, because of the New Jersey politicians and their view that you're going to be 2.1 feet underwater by 2050. So we got to disclose that to everybody. And whether you're in a flood zone or not and are required to have flood insurance is if you're in a 100-year flood zone or a 500-year flood zone. If you're in a 100-year flood zone, that means your property's more likely to flood at least once every 100 years versus a 500-year flood zone where it's likely to flood at least once every 500 years. So which one's a bigger flood risk? Once every 100 years. So therefore, if you're in a 100-year flood zone, you need to get flood insurance. 500-year flood insurance, you're not required to. All right. So here's just a bunch of disclosures about climate change nonsense and flooding. And then an acknowledgement by the seller, seller's sign and date. If the seller is dead, their executor, administrator, or trustee would sign and date. And then all the buyers sign and date that they've received it. And then both real estate agents from both sides of the transaction sign and date. And that's it. Now, a lot of people, real estate agents, just shove all these forms and documents in front of people's faces. Let me give you a little tip, pro tip here for you, okay, guys? It'll make you better than a lot of other agents out there. You know how to become, you as brand spanking new agents, you know how you could become better agents than existing ones that have been agents for the last 20 years? Educate your clients. Don't just stick papers in front of their face. Explain to them what it is. Here, let me show you. Mr. and Mrs. Seller, this is the seller's property condition disclosure report. By having you fill out this seller's property condition disclosure report, which we'll make available to all potential buyers, we're just disclosing any information and knowledge that you have about your house. So I want you to answer these questions as fully and honestly as possible. And by doing so, I'm helping limit your, well, first of all, you are required by law to disclose any known issues with your property. Okay. This is a guide here. If you're aware of any issues that are not stated on this form, bring them up and disclose it. Okay. There'll be an area towards the bottom with a bunch of blank lines. You can just fill it in there if it's not addressed in this document. But by me having you fill out this document, be as honest as possible and fill it out as fully as possible. By having you fill this out and disclosing this to potential buyers, I am helping limit your liability in the event of a lawsuit. Because you are required by law to disclose these things, whether you hire me or not. And if you didn't, or if it turns out that you lied and if somebody ends up suing you later over it, the court could award them up to triple the actual cost of the damages. By filling this out honestly and disclosing it to the buyers, it's up to them now whether they want to buy your house or not. And you disclosed it to them. They acknowledge that they've received this form. We're limiting your liability. Nothing can prevent you from getting sued ever. But I'm helping limit your liability in the event of a lawsuit to actual damages, not 3 times the cost. Okay? By filling out this form, that's how I'm helping you. Okay? See, now the client got educated a little bit. So I'm explaining like what this form is and why I'm having them fill it out rather than, yeah, fill this out and sign every page and initial every page and sign it at the bottom. Yeah, then they're like, yeah, I don't know if my agent had me fill out that form. I know they stuck a bunch of paper in my face and I was signing a lot of stuff. Okay. So one agent who educates their client versus one that just sticks paper in front of their face so they signed a lot of stuff. They don't know what you did. They don't appreciate what you did because you didn't tell them to appreciate you. Okay. So by having them fill out all these forms and telling them what it's about, maybe they appreciate what you're doing for them more because now they know you're actually doing something for them rather than just sticking forms in their face to sign. Okay. All right. So let me give you a sample of that brokerage service agreement. Oh, wait, no, that's a listing agreement from Mid-Jersey Association of Realtors. Let me see if it opens up even. Oh, boy, oh, boy, oh, boy, oh, boy, oh, boy. Try to open that again. Yeah, that brokerage service agreement opens up from a third party's website. Oh, okay, here we go. It's open now. So here we go. I don't like this listing agreement. I like the standard ones we use on njrforms.com instead. Anyway, it's still loading. Okay. But you guys can go over. This is a sample listing agreement from Mid-Jersey Association of Realtors that also addresses the compensation issues and such and disclosure of agency relationships and all that. Then we also have in our shared Google Drive, I think I have one in there too. Agency commissions, whatever. All right, so you can see all this stuff on the Real Estate Commission's website too. And you could explore it in the new forms folder in the shared Google Drive. Okay, I spent a lot of time on that, but we didn't actually even go over all the forms, right? We just went over one. So I'll have a recording I put up here. I'm going to have a recording I'm going to put up on our Facebook page. You guys can check out for explaining each and every one of these. Here's the agency relationship, exclusive buyer agency, and other new forms and disclosures. Here, let me copy that link. Oh, I have to click on it in order to get it. Share it with you. Here's the link to the shared Google Drive that has those other forms. We went over CE before, right? The continuing education.
Yes.
Yes.
We just got it here again, just because. But we already went over it in a previous chapter. So when do you need to complete? How much CE do you need to complete to renew your license?
12
12
hours.
hours.
12 hours. And when do you need to complete it by?
30th April of odd number of years.
I'm sorry, when do you need to complete the CE by, all your 12 credits by?
30th April of odd number of years. Every 2 year.
Odd numbered years,
Yeah.
right? By April 30th, 2 months
Yeah.
before the license renewal, which is on June 30th.
Yes.
Otherwise, you'd be subject to a processing fee of how much?
$200.
And of the 12 hours of CE, you got to take 6 hours of core topics, consisting of what are the mandatory core topics you need to take?
Core topics, 2 core topics, 1 agency law, 1 fair housing, and 3 core topics.
Okay, so well, no. Here, two.
So six any
yeah,
topics.
yeah. Of 6, 2 have to be in ethics, 1 in fair housing, 1 in agency law, and the other 2 any core topic. And the remaining 6 can be any approved class, whether it's core topics or electives. And you could check them here at this link to see that you've got credit for all of them that you've taken, and you could see how many more you need to take. Who doesn't need to take CE? Newly licensed agents after June 30th in the even number year. Referral agents and brokers who have been licensed as brokers for 40 years. All right. If a property is available for you or any other agent to show, it must be available for other agents from other agencies to show as well. We have this thing with coming soon listings. What is a coming soon listing? It's a way to build anticipation amongst the buying public of a property that you're going to put on the market. This is made popular by a lot of those HGTV, fix this, flip that, TV programs. But real estate agents started doing it too. But what is a coming soon listing? It's nothing more than a delayed showing. Can you advertise a property that you don't have as a listing yet? Can you advertise a property that the owner did not hire you to sell their property yet? Can you advertise their property?
No.
No, you cannot. You need some sort of agreement in writing that they've hired you to market their property, right? So you better have a listing if you're advertising it or if you're putting it in the MLS. So a coming soon listing means that it's not available to show yet. So it's nothing more than a delayed showing, okay, to build anticipation. And some MLSs are creating a status for the listing you could put in there as a active coming soon, ACS listing, they call it, active coming soon listing. So you're going to need to fill out this form for most MLSs. And it basically shows the listing office, the listing agent's name, the address of the listing, and when the first showing date's going to be available. You cannot delay a showing more than 10 days, as you can see down here at the bottom. And it basically says if there's no showings available, you can't sneak in your own clients either. That means you can't show it either. Nobody can show it when you have delayed showings. It's not available for the public to show and see. It's not available for you either.
Why would someone delay their showing?
Where or why? I'm sorry.
Why?
Why? To build anticipation. Hey, this property's coming on the market. Take a look and see. You like the pictures? You like everything? Well, it'll be available to come see and make offers on it as of this date. To build anticipation for sales. Or maybe the seller needs to do some work and do some painting and do some improvements, change the carpet or do something like that before they put it on them, before they want people to actually come in and see it to show it. Okay. So those are a couple of reasons. So no showings of the property, though, also apply to the listing agent and their office. It prevents showings, previews, office caravans for the listing broker and any other agencies that are affiliated with the listing broker or anybody else. There are no exceptions to this prohibition against showings before the first showing date. And if you need an extension to delay it even more, you have to fill out a new coming soon listing form, delayed showing form, but it cannot be delayed for more than 10 days at a pop. Written offers need to be forwarded within 24 hours. All listings entered in the MLS within 48, unless who tells you not to? Only the owner. Only the owner can tell you not to. And then you got to cover your butt and get them to sign a form called the Waiver of Broker Cooperation Agreement. So there's another form we went over, right? And here's the Waiver of Broker Cooperation as you see it in the book on page 19. Now, I got another version of this form. The wording is exactly the same. It's just the way it's formatted looks a little bit nicer. So, but in the book on page 19, right at the top of the page, listings must be entered into the MLS within 48 hours unless, and then highlight the seller directs a broker not to cooperate with any other broker. The seller must sign a waiver of broker cooperation. And this is that waiver of broker cooperation.
This is to not listed or to not listed with other brokers?
To not put it in the MLS and not share it with other brokers. So basically, if you got a buyer that's interested, they drove by and they saw my real estate sign on the front of a property, and they call you and you're looking it up, you can't find it in the MLS, so then you call me, right? And I tell you, oh, this is an exclusive office listing. That means we don't cooperate with other brokers. If your client's interested in the property, send them to me. I'll show it to them. So we're not paying out a commission to anybody else. But if you want to get a commission on it, the only way to do that is you could send your buyer as a referral to me. And then I may agree to pay you something, but I don't have to if I think that they're going to come to me anyway.
Okay.
Well,
Mm-hmm.
because this is at the owner's request. They told us not to cooperate with any other agencies. They don't want any other agencies showing this property. Only me and agents from my office for whatever reason. Okay. Now, if that is the case, you could request that I show you a copy of that form that was signed by the seller at the time I got the listing. And I need to share it with you. Okay. That's what the rule is. I can't just tell you, oh, we're not cooperating with other brokers. I need to show you the form that the sellers specifically said that. Okay. You guys got this, these notes taken up here in highlights? Yeah. Good. Everybody got it? Okay. All right. So here's my note on it. Licensing, and this is the way I've been explaining it to you guys, right? Licensing law requires all agents to share listing inventory with other agencies. If a listing is available for you or any other agent in your office to show, it must be available for agents from other agencies to show as well. Every listing must be entered into the MLS within 48 hours, unless the owner directs us not to, and then we need to get them to sign a waiver of broker cooperation. So waiver of broker cooperation must be signed by the owner at the time of the listing. At the owner's request, if they do not want us to cooperate with other brokers sharing our listings in the MLS. Agents must never introduce this form or idea to owners about not sharing the listing in the MLS unless the owner brings it up. Why? Because it's not in their best interest. Why would you not want to share your listing with thousands of other agents in the state who may be working with potential buyers to see your house and instead rely on one agent or all the agents in their office only and any clients that they may be working with? It's a disadvantage to the seller. So why would they request this? I don't know. Maybe they had a bad experience with a particular agent or agency and, they want to have more control over the listing. Okay. But I would encourage them not to sign a waiver of broker cooperation. But most agents, wouldn't mind this because that means that they're going to get both ends of the deal most likely, because any buyer has to come to them. Double the commission, one deal. Now this agent, I don't know what the hell she was thinking. She put the listing in the MLS after she got her client to sign a waiver of broker cooperation telling her not to. Sometimes agents just keep all these forms in their, just in case they bring with them all these forms, but their clients don't need to sign it. They must have had them sign this form and then put it in the MLS anyway. But she got in trouble. $1,000 fine. So here's the version of the waiver of broker cooperation form. I like it because it's formatted a little bit better. You've got this disclosure here in a box up at the top. It's the same wording as you got here in the book on this form. It's just formatted a little different. And on the reverse side of it, it has some disclosures, or lower on this if it's legal size paper. It not only goes over, what a waiver of broker cooperation is, explaining it to the client, but it also says, according to the administrative code and what sections of the administrative code, unless directed not to do so by the owner in writing, we have an obligation as real estate agents to share our listing inventory with the general public and other real estate agents. Okay, unless we're told not to specifically in writing. So the obligation to fully cooperate with other licensees includes the requirements that the listing brokers notify any MLS about a listing within 48 hours and make any changes within 48 hours. We need to transmit all written offers within 24 hours. And we cannot place any unreasonable restrictions on showings of the property. And requiring you to call up our office to set up an appointment for the showing is not considered an unreasonable restriction. So that's basically what all that says. And all requirements imposed by the obligation to fully cooperate shall be complied with on all listings unless the client or principal, with full knowledge of all relevant facts, expressly relieves the listing broker from one or more of those requirements in writing. Such writing shall be signed by the owner and made and attached to the listing agreement. Basically, this is the waiver of broker cooperation they're talking about. That's what that law says. And such writing shall be made available for inspection by other brokers upon request. So if I tell you we're not cooperating with other brokers, you could say, well, I want to see that waiver of broker cooperation that they signed at the time you got the listing. And they're in the administrative code itself, 11.5-6.4, subsection F, section 2 is where they give that disclosure, where you are required, if the other agent requests a copy of it, to provide it to them according to the Real Estate Commission's rules, the administrative code. Okay. Then the date, the owner signs, and then the listing broker signs. Those new exclusive and designated agency or buyer or tenant agreements, they're in the shared Google Drive here. I'm not going to keep copying and pasting and opening all these documents to share with you. It's available on that class links Word document and notes. Okay, class links and notes Word document. So you could get all of these, that open house sign, the different versions of designated agency forms and stuff. I mean, you're going to get them in your office anyway. I'm just sharing them with you here so that you could take a peek at them if you like. They're all in the shared Google Drive that you could download. And I have all these links either on this slide, but I also have them available in that class links Word document, because it contains all the information for all of the slideshows. All right. Now let's talk about something. Let's talk about love. Let's talk about love letters from the real estate agents that they try to get their buyers to write these love letters to entice sellers into accepting their offer. I hate these things. I think they were always manipulative. They do work, but I thought it was always a manipulative thing to do that agents do this stuff, and it always pissed me off. And I often gave agents, my 2 cents of what I thought of these love letters, and now what I believe was also true. It is something that it is manipulative, but it could also be discriminatory. All right, let's see how. Let me let the speaker speak, and you guys can watch this video yourselves. Ready? Here we go. Come on.
Hi, I'm Charlie Lee, Senior Counsel and Director of Legal Affairs at NAR. As buyers compete in a hot real estate market, they are searching for ways to stand out from the crowd. One method being used is to send a love letter to entice the seller into choosing their offer. While a love letter may seem innocent, they can raise fair housing concerns and risk exposing both the real estate broker and their clients to legal risks. The Fair Housing Act makes discrimination illegal in the sale or rental of housing and prohibits making housing otherwise unavailable because of race, color, national origin, religion, sex, disability, or familial status. Many states and local governments have their own fair housing laws, which can include additional protected categories. The use of a love letter often presents fair housing issues because they often contain personal information about the buyer, such as their race and culture or traditions, as a way of appealing to the seller's emotions. Some buyers even go as far as sending sophisticated packages that include photographs and videos. For example, a buyer might send a letter with a photo of their family around a Christmas tree. As a result, the buyer has revealed their religion, which is a prohibited basis for a seller to base their decision to reject an offer. While it may not be the buyer's intent for the seller to use this information to discriminate, that is essentially the position that a love letter can place the seller. When considering that the information cannot be easily forgotten or unseen, a love letter may ironically cause the seller to be fearful of selecting the buyer's offer because of potential discrimination issues. Therefore, real estate professionals should advise their clients about the risk of love letters and, at a minimum, stress the importance of avoiding including any information in the letter that could be used to legally discriminate. But of course, even a photograph of the buyers could lead a seller to give preference to a buyer or reject them based on race or other background. Fair housing is a high priority throughout the country, and states are closely monitoring the practice of love letters. In fact, just recently, Oregon enacted a law to take effect on January 1, 2022 that bans the use of buyer love letters. Here are some best practices to consider when it comes to love letters. At the outset of the relationship, speak to your client about the risks of buyer love letters and the potential fair housing issues they raise. Remind your seller client that an offer should be assessed based only on objective criteria, such as price and timing. If your seller client insists they want to receive buyer love letters, advise them to consult legal counsel and to document their decision-making process in selecting an offer. Avoid helping buyer clients to draft or deliver love letters. Be sure to warn them against revealing any personal information that could raise fair housing issues. Counsel them to focus on the characteristics of the home or other objective information. Lastly, help your buyer clients find other ways to differentiate themselves to win the property. Beyond offering more money, the buyer may consider offering more flexibility with the closing date, additional earnest money, or waiving other contingencies that may appeal to the seller. Thank you for watching this episode of Window to the Law.
So there you go. Those possibly discriminatory love letters, enticing sellers to accept your offer instead of someone else's. Instead of just focusing on the objectivity of the offer itself. Oh, remember me? I was there with the kids and they loved this. And, we're not going to change a thing in your house. We love the way you have the house decorated and everything. That basically suck up letters, and then they end up tearing down the house, So once they get their offer accepted, yeah. All right. So all agents must place their client's interest above all others, including their own. However, they have an obligation to treat all parties fairly and honestly and make reasonable efforts to obtain material information about a property and disclose it to each other. Sellers agents must disclose to potential buyers material information about the physical condition of a property, as well as any other information a reasonable buyer would consider important before purchasing. So, what is material information about a property? It's not necessarily problems. Those are material defects that are visible. Material information could be improvements. It could be how many bedrooms, how many bathrooms, the architectural style, the type of roof. Is there a garage? Is it attached or detached? This is material information that could affect the buyer's decision in purchasing, and therefore that is called material information. It's any information that could affect our client's decision in purchasing. But you could have material information on the seller side too, that the seller would want to know about the buyer. And that's this next paragraph I have written here. Likewise, buyer's agents have to make reasonable efforts to make sure the buyer is financially capable of purchasing before asking the seller to take their property off the market to accept an offer that they're presenting. At minimum, us as real estate agents, make sure that your clients have a pre-qualification letter that should be obtained from a reputable lender that you're aware of. Okay, some of these people, they go online and they get a pre-qualification letter generated online that doesn't amount to squat. They're not even real. And disclose to the seller if they become aware of the condition that would make the buyer unable to proceed. Bounce deposit checks, inability to get qualified for a mortgage loan, etc. We need to share that with the seller if we come across that, just like we want the seller to disclose to buyers any problems or issues with the house, and whether it's on city water or well water or city sewer or septic tanks, etc. So that's what we have highlighted here, but I said it here in layman's terms, straight out, a little clearer on top here. Okay. These are the 5 business relationship types we have, starting with the 4 types of agency relationships, which are on this slide. The next slide will have the 5th one, which is transaction broker. So first we go over the 4 types of agency relationships, which are spoken about on the CIS form. We have a seller's agent. What is a seller's agent? They only represent the seller with listing the property for sale or rent.
What page are you on? Sorry.
Oh, I'm just following along the slide.
Okay.
I'm not even looking at any particular page. Let me see if that lines up with one.
19.
Okay.
And flip over to 20.
Okay, thank you.
Yeah. Oh, yeah. At the bottom of the page, it talks about the different types of agency relationships, and then it goes over to the next page. Yeah, correct. Okay, so seller's agent represents only the seller. Exclusive listing agreements ensure that the owner is only working with us to market their property for sale. That's why we call them exclusive listing agreements. It doesn't. Exclusive listing agreement um, is different uh, than an exclusive listing. So, exclusive listing agreement is one where the seller only hires one agency to market their property for sale or rent. Okay. An exclusive listing would be one where they also signed a waiver of broker cooperation. So therefore only one agency can show it. See the difference there? Um, Buyer's agent only represents a buyer, and that form has been updated in the shared Google Drive here. There's a new form of buyer's agency agreement that's actually turned into a brokerage service agreement for buyers. Uh, Here, I'll share that with you. This is the new exclusive buyer agreement. All right. Then we have disclosed dual agency. If you're going to work as a dual agent, that means you are either going to work personally with both the seller and the buyer, or the landlord and the tenant, or it could also be you are working only with the seller or the buyer, and another agent in your office is working with the seller or the buyer, the other one, right? Your company is representing both parties in the transaction. That's why they call it agency relationships. The agency, your company is representing both the seller and the buyer in the transaction. And there's nothing wrong with that as long as it's disclosed to them in writing. Because disclosed dual agency, perfectly fine. Undisclosed dual agency, totally illegal. Okay. Wouldn't you want to know if your client is exclusively representing you, or if they're also representing the other guy in a transaction? And designated agency is that new type of agency where the broker can designate one agent in their office to work exclusively and only with the buyer, and another one to work exclusively and only with the seller. The broker is still a dual agent because, hey, their company is representing both parties, but the broker assigned one agent to work exclusively with the seller and one with the buyer. So therefore that's designated agency agreement. Okay. There's 4 versions of that for buyer, seller, landlord, and tenant. And nothing in the law says you need to work as an agent. You could work as a transaction broker who doesn't represent anybody. You just act as a manager of the transaction. You write the contract just like an agent would. You do all the things an agent would do. You show properties, you take listings, you write contracts. It's just that you don't have those legal fiduciary duties that you owe to the people you're working with. Okay. We only owe them to clients. And who is a client to us and who is a customer? Well, if you're working with somebody as a transaction broker, they're always a customer. Clients we owe fiduciary duties to when we work as their agent. What would you call someone else's client? Who are they to you? They're a customer. Yep. So we don't owe them fiduciary duties, but we do owe them fair and honest dealing. We can't lie to people. We got to treat everybody fair. Okay. This business as salespeople, we're not like used car salespeople trying to put heavyweight oil in a car to try to make it stop making those banging noises, when it's running, until they get off the lot, and now it's their problem. We don't do that. Okay. We disclose all the information about a property, problems as well as improvements. Okay. And we treat everybody fairly and honestly. Okay, we want to be reputable salespeople. Treat it like a profession, and then people won't look at you like a used car salesperson, right? Nothing against used car salespeople, but they got a bad rep from trying to get junkers and slap some paint on them or put some heavy oil in them to make them run better temporarily until you drive off the lot so they could sell it to you. Okay, we don't want to be that guy or girl, right? Now, licensees can select to work as a transaction broker anytime. However, it makes more sense because I did this write up because students are always asking me, well, why would you work as a transaction broker? Why would anybody? Well, here, licensees can select to work as a transaction broker at any time. However, it makes more sense to do it when offering a la carte services. You should have an employment agreement with the sellers and the buyers, landlords, or tenants, which is now required by law with a brokerage service agreement. This says exactly what you're going to be doing in exchange for the fee you're getting paid. Agencies that work with for sale by owners often use this type of relationship because for a flat fee or a la carte service menu, the agent doesn't want to be liable to owe fiduciary duties to someone who isn't paying them much money. And all you're doing is just putting the listing in the MLS for them. And then the homeowner does their own open houses. They do their own marketing on their property. You may place it on your company's website and then forward all the phone calls that come in directly to the seller. Okay. So for a flat fee, we could do that. And you don't want to represent them legally and have any liability to them. So you could work with them as a transaction broker. This is where it makes sense to do that. Okay. So a transaction broker is a manager of the transaction, but doesn't represent anyone in an agency capacity. They don't owe fiduciary duties to anybody. The agent should have an agreement explaining what they'll be doing in exchange for the fee they'll be earning. That's the brokerage service agreement. And the person the licensee is working with as a transaction broker is referred to as a customer. They're not a client because clients are owed fiduciary duties and customers are only owed fair and honest dealing. Have I repeated that enough yet? Don't worry, I'm going to say it a lot more. You need to know this stuff. So here's some of the forms we already went over, all on one slide. The CIS form, that's just says the different ways we could work with somebody, the different agency relationships and business relationships. The informed consent to dual agency, informed consent to designated agency, the opinion 26 notice, which tells people that they have the right to hire a lawyer. So it must be sitting as the cover page of a contract that we prepare. The Attorney General's memorandum, we give that to owners of property anytime we get a listing. Tells them they need to follow the New Jersey laws against discrimination as well as the federal laws. The lead hazard addendum. This is a document we didn't talk about yet, but there's a federal form, a federal lead hazard addendum that's required in all 50 states, where the owner has to fill it out and disclose if they're aware of any lead paint on the property, any lead hazards. So if it's only required for properties built prior to 1978. 1978 is when they outlawed lead paint. Okay, lead was used as a pigment and drying agent in alkali oil-based paints. So lead in paint, if you have lead paint, how can you identify it by looking at it? It could crack and peel, and it'll be very brittle and hard. And you know what little children do? They stick everything in their mouths, right? Their fingers, their hands, they'll look out the window and put their mouth on the windowsill and suck on it. You know, if there's little paint chips, they're going to take them, they're going to put them in their mouth. And this could cause serious developmental issues. Children, small children under 6 years of age, they are developing beings. they're not just small humans. Okay, they're developing beings still. They're still being developed. Their nervous systems, their brain, their circulatory systems, their reproductive systems, they're all still being developed. And lead can cause serious developmental issues. It could cause lower IQ. It could cause nervous system disorders. It could even kill them. Okay, so we need to have the owner disclose of any known lead hazard on the property or any reports that they have pertaining to lead on the property. And then we also need to give buyers the lead statement that was filled out by the seller. We need to give the lead booklet, which explains the different hazards and resources for dealing with lead. And we need to give buyers and renters a 10-day opportunity to conduct an inspection, their own inspection for lead, or waive that opportunity. So what are the three things that we need to give to buyers or renters pertaining to lead? And for which properties? Any property built prior to 1978. We need to give the lead hazard statement,
Right.
the booklet,
Sure. Mm-hmm.
and 10-day opportunity to conduct an inspection or waive the inspection if they want to close any sooner. Okay. And that Attorney General's memorandum, that explains to people that they can't discriminate. We got to give that to property owners. Now, there's a newer updated version of this. They got the link right here. It's called the AG Memorandum with FCHA. I think that's in this version of this book, since this book came out. But here, let me share with you this latest copy of it. I'm not going to talk about it now. We'll talk about this when we get to that chapter. That'll be in chapter 4, because the FCHA, that's the Fair Chance in Housing Act. Remember I told you about doing criminal background checks on prospective tenants and how that could make you racist? All right, well, we'll go over that in chapter 4, and that's the Attorney General's memorandum with that new law, the Fair Chance in Housing Act. Okay. If you go all the way to the end of that document, you can see what I'm talking about. All right, exclusive buyer agency agreements and procuring calls. I don't know why this should even be on here anymore, since we now have those brokerage service agreements. This should not be really an issue anymore. But nonetheless, it's still going to be on exams. We need to know who and what a procuring cause is. So, buyer's agency, when representing the buyer in a real estate transaction, you should have an exclusive buyer's agency agreement filled out. Today, we have this brokerage service agreement with exclusive buyer agency agreement combined. Now, this helps establish our agency relationship with the buyer. It shows that we owe them fiduciary duties. It's an agency relationship, right? And it provides evidence to protect the buyers against claims of discrimination of steering, limiting the properties shown based on commission, which may be lower than the amount the agent's willing to work for, but that agent doesn't have that discussion with their buyer or renter client and about that. So now they don't show them properties that are not offering a high enough commission for the agent. So now the agent's putting their own best interest above their clients. Instead of searching for a home that meet their criteria and their price range, they're searching for homes that will pay them a higher commission. And if they filter them out and it turns out that they're not showing them properties from one certain area because all of the properties in that certain area are not offering that higher commission, well, you could easily be found guilty of steering, because the person does not need to prove it was your intent to be harmful. All they need to prove is that a discriminatory act had occurred. And steering is when you make the decision of where somebody should be by limiting their options of the properties that you're showing that meet their criteria, or by trying to convince them not to buy in a certain area. Now, a procuring cause, this you will get on exams. You need to know this. When two buyers, here, I like my definition here too. It makes it easy to understand. When two buyers agents are in dispute as to who's owed the commission, the one who could prove they did the most work leading up to the sale, difficult to prove, would be the one who's owed the commission because they procured the sale, because they did the most work that made them the cause of the sale, thus the term procuring cause. So the complaint is filed with the local Realtors Association, not the Real Estate Commission. What is the job of the Real Estate Commission? You guys remember this from the first paragraph of this book? To protect the public from unscrupulous buyers and sellers, or to protect the public from unscrupulous brokers and salespeople. Buyers and sellers are the ones that are the public. Okay. And the Real Estate Commission's job is to protect the public from unscrupulous agents, not mediate arguments among bickering agents over commission disputes. So the Realtors Association actually has a panel of trained brokers that have been brokers for a certain period of time. They're allowed to get this training and become like judges. They listen to complaints, procuring cause complaints, and then they've heard it all before because they're brokers themselves. They've been in the business for a while. Then they got this special training on how to mediate these arguments. They'll listen to the argument that you have to say. They'll look at the evidence you have to show, and then they'll determine who is owed the commission. Okay. But now that we have these brokerage service agreements, this shouldn't be an issue anymore because that's covered in this brokerage service agreement that you're only one representing that client. And they're the only one that you're working with. And it is a contract between you and them. So because of that, this shouldn't be an issue anymore. But even though the law requires it, if you didn't fill one of these out, it could be an issue still. So there you go. What is a procuring cause? It's the agent that's owed the commission because they did the most work leading up to the sale, even though that's difficult to prove. Boom. That's it. Study that. There we go. We got it again on this slide. That same explanation. And I tell you here that it shouldn't be much of an issue anymore now that the law requires brokerage service agreements that discusses the commission's fees and who's paying them. All right, let's talk about your independent contractor employment agreement that you're going to sign with your brokers when you get hired. So the broker's agent must sign, the broker and the agent must sign an independent contractor employment agreement. There's one in this book, but there's also on page 37 to 41. But it's going to be missing two sections. The section that talks about your commission splits and while you're working at the brokerage firm, and the section that talks about how much you're going to get from the transaction that you did not yet close on that you were working on if you leave the brokerage firm. Those I refer to as addendums A and B. Okay. So you'll just have the standard independent contractor employment agreement that kind of looks like this. Okay. And they're pretty standard. You just have the fill-in lines. Now, if your independent contractor agreement that your broker brings up doesn't look like this, and was not the one that was prepared by the New Jersey Realtors, so it's not the standard one, they may have their own custom version of it. Read every word. Okay. So here's a copy of that. It's in your books, but I'm going to also share it with you in the chat window here. I'll call it the ICA, the Independent Contractor Agreement. Boom. So what are the Real Estate Commission requires certain things to be in every independent contractor agreement, whether it's a standard one or if it's a custom one your broker has. It must have the rate the commission rate paid to the salesperson while employed at the brokerage firm, I call that addendum A. Addendum is any addition to the contract. Okay, has the word add in there too. A provision that the broker promises to pay you your commission within 10 days after the commission's received or as soon as the check clears. And the rate of compensation to be paid to the salesperson after termination, that's addendum B. Now, that one's going to be a lot longer because it depends how much work still needed to be done. You cannot finish that transaction that you were working on because you left the brokerage firm. And that transaction stays with the broker because that's their client. So the broker will have to assign another agent in the office to finish doing the work on that transaction. And if that was you that they assigned to finish that transaction, would you do it for free? No, you don't work for free, right? Yeah, I don't blame you. So that agent that left can't expect to get paid their full commission on the deal that they didn't close. So they may get paid a portion of it still, but because they did some work, but they're not going to get paid all of it because the broker is going to have to pay another agent to finish the transaction. So that's what addendum B goes over. Now, some brokers just may be like, you know what, that's too much of a pain in the ass, so I'm not even going to do that. What I'm going to do is this. You leave, you get nothing. No zoop for you. 0, 0, 0, 0, 0. Easier to figure out. Close out your deals before you leave. And then a provision that any future changes to the contract will be binding only if in writing and signed by both parties. Yeah. In other words, your broker can't change your employment agreement without you signing off to those changes, just like any contract. Makes sense, right? And then also, the broker must provide an agent with a written account of all monies due to the salesperson for transactions pending after termination within 30 days of their termination. So the broker needs to make a list of all the transactions that you've been working on and how much money you can get paid on if they still close with another agent, of course. Okay. If the deals fall apart, they don't got to pay you commission, but if they close still, you get a portion of it. So they need to make a list. How much do you stem to make from each one of those transactions?
So in the case of commercial transaction, you said that it can go for 10 years also. If in that case a salesperson leaves the firm, does he get the commission, the 10-year period commission?
I guess that would need to be addressed in that employment agreement, all right? I mean, you closed on the deal, but is that client going to be there for 10 years? You know, we don't know. So you're not going to get paid all of that money right away. The checks come in every year. Is your broker going to pay you that commission still? Well, I don't know. Depends on what it says in your employment agreement. I never had to deal with that, so I couldn't really tell you. But it's a good topic that you brought up that I should look into my employment agreements and see if I even addressed it. It's good. Good catch there. Good question. I like it. All right. It depends. You got to read the employment agreement. See what it says. Employment agreements are important. And if it's not discussed in there, oh, that could be a potential issue, right? Can another broker pay you directly?
No.
So they wouldn't be able to pay you anyway. They would have to, because they're no longer your broker. They'd have to pay your current broker, who then pays you. Oh my God, I could see that commission getting chopped up and chopped up and chopped up.
Yeah.
Yeah. So if you ever do decide, it is a big decision to decide to leave a brokerage to move somewhere else. So you got to be committed to it. You got to realize if you have multiple transactions going on, try to close as many of them as you can. And I know we get in the habit of constantly prospecting to get new business. So now you're getting new business before those other transactions close. And now you're like, oh my God, am I ever going to be able to leave this place? Well, you know what? At some point, you need to cut the cord if that's the decision you're going to make, and cut your losses and realize, hey, I may not get paid on this. Time for me to move on and start somewhere else. So I don't have to be worrying about this no more. Or plant your butt and stay there, one or the other, right? As my dad used to say, crap or get off the pot. Make a decision. Sorry for my crudeness, but hey, this kind of fella I am. Here you go. Let's highlight these. Independent contractor agreement. You could write page 37 under that, because that's where you could find the sample independent contractor agreement. This is on page 20, by the way, where we're at. You're going to underline independent contractor agreement, write page 37 under it. After the first bullet point, write addendum A. Highlight the second bullet point that talks about when the broker needs to pay you your commission. After the third bullet point, write addendum B. And then highlight that last sentence in that section that talks about broker needs to give you accounting within 30 days of how much you stem to make from transactions you've been working on if they close after your termination. All right.
Can I ask you a question not pertaining this?
No, you can't ask any questions in class. Nope, nope, nope. Yes, you can.
Okay.
Go ahead.
I'm sorry. This was from the beginning. A member of a private real estate trade organization. Who would have a private real estate trade organization?
NAR, National Association of Realtors.
And they buy real estate for their own businesses?
Oh, wait. What is this pertaining to?
That's for this is a key term, is for the realtor, right?
Yes.
And I'm asking just randomly, a private real estate trade organization, who would be, I know it's a realtor, but
yeah, okay, a realtor and realtor associates is what we call members of the Realtors Association, NAR, National Association of Realtors, New Jersey Realtors, or a local association of realtors. These are trade associations. A trade just means business, okay? So this is a business association for real estate agents, okay? Real estate is the trade that you're entering, right? That's the business you're entering in. And that association is a local, state, or national association of realtors that has some sort of benefits for its members, whether it's offering affinity program discounts when you purchase a printer or a cell phone or a laptop or a car, or training materials, data, and information you could use that'll be helpful for you in your business. This is what trade associations do. All kinds of sales have trade associations for their businesses.
But for example, like a private real estate trade organization.
Yep. It's private to its members.
It's private to its members. So the members would have discounts like on buying certain things.
Yes, and would get certain privileges, access to certain information. Like our state association of realtors gives you access to a legal diary legal database of questions that could help you, that you may have as a real estate agent about certain things in real estate transactions. You could even submit questions to this on New Jersey Realtors website, and they will. You could have questions about all kinds of random stuff in the business, contract questions, commission questions, all kinds of stuff. Is this legal questions? And their New Jersey Association of Realtors will give you, their attorneys will answer questions on those pages. They also give you access to different kinds of statistics and legislation that was passed, and they help fight for certain laws that benefit the members, right?
Can they buy and sell real estate?
No,
Oh.
no.
Mhm.
It's just an association for the members that provides some sort of privileges for their members, whether it's discounts, data, information, our electronic contract form systems. We get that for free as part of our membership in the State Association of Realtors, so that you could have your electronic contracts. I'll give you a shortcut to it. I told you I buy domain names. I point them to things. It's easier for me to remember where to go. Like if you're going to draw up a contract for sale or lease, I go to njrforms.com. That's a domain name that I bought that I pointed to. You know what? I don't even remember where the hell it points to. So hold on. Let me try to find my browser window, a browser window, and show you. Okay, so I go in here, I could type in NJR or njrforms.com. All right, it forwards me to njrealtor.com/zipform. Okay, NJR Forms is easier to remember, you know. So I just bought the domain and I just forwarded here. So now I could get to here, and I could you could see here, by the way, they keep a list of all the different changes that they make to all the different forms and contracts in this system. Whether it's the sales contract, see they made some revisions here on 7/25, because there were some changes in laws that our lovely governor made, boosting up the tax when you own real estate and you sell it, making New
Okay.
Jersey a state that's not really good for ownership. Anyway, you log
Thank
into
you.
this is the contract form system that they have. But we're also on their website. So if we go to membership, you could see like all kinds of stuff that, you know, the code of ethics, training classes. They got a section on their site here about realtor safety, which we're going to actually go over as well. Just not on this page. Where's the realtor safety? Okay, scroll down. Prospect identification forms, agent identification, itineraries, planning strategy, open house tips, 56 realtor safety tips, top tips for realtor safety, safety products and apps. Like one of them that we get for free with, I'm not sure if it's by the Realtors Association or one of the MLSs gives it to. I think it's one of the Realtor Associations. Gives it to us for free, is access to a background check tool. I have an app. We get it for free with our membership called Forewarn, from a company called Forewarn. I used to tell agents all the time, hey, you could get this. It costs you about $20 a month, or you could deduct it on your taxes. You could do background checks on any potential buyers or sellers or anybody before you go meeting with them at their houses, you know, see if you feel comfortable going to meet with these people, right? See what they're all about. So I could put in anybody's phone number, email address, or name, and I could find out if you've had any criminal history, if you've had any court issues, if you've I could see what cars you own. I could see what and history, what cars you've owned in the past, what real estate you own, where you live. I could find out all kinds of information just by sticking your name or phone number or email address in here. It does a background check, and I could do unlimited background checks on people. Now, you're only supposed to use it for legitimate business purposes, okay? Don't go stalking exes or doing anything like that with this, okay? Um, but that's one of the tools that we get for free with our membership in one of these realtors associations. But they give us all kinds of tools like that. Let me see. I got tools for doing virtual tours with my cell phone. It's called what is it called? It is called QB Casa. QB Casa. And basically I open the app and I could, walk around the room along the wall. It does measurements of room sizes, the wall, just by me walking around with the cell phone with this thing on. And it'll create a floor plan of the building for me, or the apartment or the room. We get that for free with our membership in certain MLSs or realtors associations. The background checks, zip forms, we get that for free with New Jersey, the State Association of Realtors. Realtor RPR, that we get with NAR, National Association of Realtors. This is a great thing. If you're a member, we have like 8 different MLSs in New Jersey. And I don't know which ones you're going to be a member of. You'll probably be the member of more than one of them. Through this interactive tool, Realtor RPR, you could download the app for your cell phone. You could do a search, one search through this app, and it'll search all the MLSs you're a member of all at once. Okay. And it'll get all the information you want. You could put together CMAs, the comparative market analysis reports, buyers reports. You could find out information about a particular property that's available in the public records. And it's a great tool. I'll show you about it at the end of the next chapter. I'm not sure if it's the end of this chapter or the end of the next chapter, where I got a bunch of tools where I give you the links to and little videos that show you how they work and stuff. But there's all kinds of tools like that we get for free with these associations. Okay. So you do get some kind of benefit out of it. Here, let's see, membership. What else we got here? So this one is Realtor Safety. Here, I'll share that one with you guys because Realtor Safety is important. Realtor Safety. We also have research that you could, for buyers and sellers, housing market statistics, information you could put on your websites for content, to drive consumers to your website. We got consumer calculators, let's see, government affairs, all kinds of disclosures, as well as government issues, federal issues, state issues, and local issues by town. The New Jersey Realtors attorneys can go out and fight for whatever benefits real estate, selling real estate, renting real estate, the homeowners, buyers, and renters. They advocate for laws. It's kind of like a political action lobbying group for making sure that we only make laws that benefit property owners and buyers and renters, etc. Not the politicians or for whatever stupid other reasons they may want to create laws for. They got a list of advertising rules and real estate regulations. What's that about? I think this is about business cards, probably. Real Estate Brokers Act, Real Estate Commission rules. Yeah, what things you can and cannot say in your advertisements. Real Estate Commission's business guidelines. What's that about? Okay, this one's for the business cards. I'm going to show you this later in the slideshow. Let's go back. Real Estate Commission rules. Okay, this is all about the administrative code. I guess you don't need to send in $10. You could print out the stack of papers for the administrative code yourself. Or if you want to read it, look at that. Department of Banking and Insurance. Real Estate Commission's a division of the Department of Banking and Insurance. They have investigative units, education, licensing, and subdivided land sales control. And then it goes all over all that. Here, I could share this with you. This is the administrative code link. All right. Then we also have here, what is this? We're exploring together. There's so much information. I don't even see it all. You stumble across new stuff when you go on this site. Oh, let me close these because I may have opened in another window. Dooby dooby doo. Doo dooby doo. Come on. Must be a big document. All right. Oh, this is the law. New Jersey statutes 4515. Okay. So look at that. So they got linked to New Jersey licensing law 4515 here. Okay, look at that. All right. So actually you could get all of this on this one page. So let me just click on this one page and share that with you. Boom. And what else do they have on this page? Local issues, state issues, political action, flood disclosures, the graduated percentage fee. That's the tax that the new tax on property owners. All kinds of other issues. There's so much to go over here. Oh, look, they got a version of PhotoFi that we get for free. Hold on. There we go. New Jersey Realtors and PhotoFi. You could get this tool for free as well through them. It's for making flyers and stuff like that. I'm looking for their legal diary. 13 logos, trademarks. You know what? Let's go to their homepage. I know it's on the homepage. Oh, here we go. Legal library. You can look at their legal library and do a, this requires a login, but it's their legal source resource library. And on this tool, you could see here's some list of top questions that people recently asked. Or can rent be prepaid by a tenant in New Jersey? They got all kinds of compensation for unlicensed assistant. Is it permissible? Is it? Tell me. Let's read their question here without reading the reply. Is it permissible for a salesperson or broker salesperson to compensate directly an unlicensed assistant, for example, paying an unlicensed individual by the hour for clerical tasks?
No. What's clerical mean?
Secretarial work, paperwork, paper pusher.
Oh, I guess. I mean, if it's just paperwork, I want to say no, but I also want to say, like, if it's just paperwork.
Let's click on it and look. Yes, it is permissible. It is not permissible, however, to base their compensation of a personal assistant or secretary on the success of their activities. You could pay them by the hour. You just can't pay them a commission based on a sale happening. If you're going to pay an assistant, you could pay them by the hour, but you cannot pay them based on the success of their activity that they're hired to do, because that would be commissions for real estate work, and you need to have a license for that, and only a broker can pay. So compensation should instead be directly related to the duties performed, not the licensee.
The other one that, sorry, go ahead.
Oh, go ahead. I was done.
The other one that said about paying a landlord all the rent before you move in, is that allowed in New Jersey?
Okay, can rent be prepaid by a tenant in New Jersey? Anybody got an idea? See how this sparks questions. These are just the top questions, but look, there's all these other categories here, and these New Jersey Realtors attorney group answers these questions for you. So can rent be prepaid in New Jersey? This was a question asked in March 9th, 2021. It was updated 5 years ago. So it tells you if there's any updates to it. But Okay, let's take a look and see the answer. Any prepaid funds held to secure future rents are considered to be part of the security deposit. This includes the last month's rent. It does not matter how the prepaid funds are labeled. Courts have determined that advanced rents in excess of 1.5 times the monthly rental payment violate the security deposit law. So the landlord may only require 1.5 times the tenant's monthly rent as security deposit. They cannot also charge you the last month's rent in advance. Okay, because then that's 2.5 months, right? Of the lease. The landlord may not require more than 2.5 times the monthly rental at the inception of the lease. So the first month's rent in advance and a 1.5 month security deposit. Okay, that's the maximum. Can a landlord charge you pet security? Not if they already charge you 1.5 times the monthly rental figure as security. They cannot charge pet security on top of it.
Oh, okay.
It's still security. It does not matter how they labeled the funds. Like you could come up with one, just in case deadbeat tenant destroys my apartment payment. You know, it's still security, right? So anyway, there's all kinds of questions here. This legal diary or this legal database, you guys will have access to this. You need to be logged in. I'm logged into it still here in order to get access to it. This is a wealth of information. You could spend hours just reading through these things. It is very interesting.
What is
this? This is njrealtor.com. But this is specifically legal.njrealtor.com. Here, I'll send you it. It's a NJ Realtor legal. Is it called the legal diary or legal library? How about that? Legal resource library. And I'll give you the link. There you go. Once again, all of these links are in that class links Word document that I have. All right. Back to the slideshow. And we highlighted everything here.
So we cannot. So
yeah.
We cannot use this link. We cannot open this. We have to log in, right?
Yeah, you need to be a member. See, that's the benefit of being a member of the Private Trade Association that Gladys asked about, right? There's one of the benefits. All right. So the next up topic is advertising. We're going to go over so much information. You're going to get a lot of questions on exams about advertising, but we're going to go over this tomorrow. You know why?
4:30.
It's already 4:30. So let me stop the recording right here halfway through this chapter.